Good morning, everybody. Thanks for joining the call. Just a couple minutes early. We're just waiting for everybody to get in. Good morning, Tanya. I wonder if it's Tanya or Tanya.
Okay. Good morning, everyone. So I'll just be waiting for one more minute and we'll get started. Thank you all for joining us this morning. Actually, while we're waiting, can you all tell us where you're joining us from today? That'll be great.
Ray Rycroft.
Wow. And there. Oh, I see lots of places here.
To Lethbridge. Oh, it's Kelowna. Nice. Cochrane. I can't believe how much Cochrane has changed in the last 10 to 15 years. Pretty crazy.
From Cochrane, and they're just loving it there.
Yeah. Wow, it is stunning, and that they've been able to maintain that sense of town, right? Like the Old West town too. I think they've done an incredible job with their growth. Brooks, good morning.
Nice. Morning, Brooks. Okay.
Calgary.
Hey, good morning, everyone. Thank you so much for joining us today. So happy to have you all join our workshop. This is going to be a hands-on workshop. It's going to be a 3 hours hands-on workshop. So just get comfy, grab a coffee, and we've also sent like an email, a reminder email yesterday. So if you missed that, just don't worry. We'll cover some of the links that we've sent yesterday, today in our chat. So before we get started, we would like to acknowledge that Business Link acknowledges and respects that we're on traditional land, meeting grounds, territories, gathering places, and traveling routes of Treaty 4, 6, 7, 8, and 10, and the home to many First Nations, Métis, and Inuit people. In the spirit of reconciliation, we acknowledge the lands of those who have come before us, reside here now, and in the future. Just a couple of housekeeping notes. If you have any questions, please submit your questions in the Q&A. Or if you feel you have a long question, you can also unmute and just ask Tanya the question directly. This bootcamp is being recorded. A link to the recording will be shared by email to everyone who participated with us today. There are also some closed captions are also available. So just click the CC button at the bottom of your Zoom screen, and hopefully that should work. Just remember to use the chat throughout today's session. Share any thoughts, any questions, anything that comes to mind. Again, there's also a Q&A for questions. And as I said, if you feel like you need to kind of spend more, you have more thoughts on your question that you want to share with us, you can also unmute and feel free to ask. So welcome again. Welcome to the Cashflow Canvas Bootcamp. This is going to be a 3-hour session. It's going to be about just helping you control your business finances. And so whether you're just starting like in ideation phase, you're just getting started, you have an idea that you want to bring to life, or you're just planning out your next move. This bootcamp hopefully will give you a clear financial kind of plan and a roadmap on what are the next steps, and hopefully give you that kind of confidence to plan out your financial journey. My name is Abdullah Mohammed. I'm Manager of Client Services at Business Link. If this is the first time you're joining us for one of those Business Link webinars, welcome. Business Link is a government non-funded organization. It's a non-profit organization. We've been around for 30 years. Our DNA is just helping small businesses get started. So we have different programs and services for startups or established businesses. And I would welcome everyone just to visit our website, businesslink.ca. There are so many content and resources there that can help you get started in your business venture. And without further ado, I'm happy to introduce and thrilled to introduce our facilitator today, Tanya Woods Richardson. She's founder and CEO of Nail the Numbers. Tanya has obviously been in this domain for quite a long time, over 30 years of entrepreneurial experience and coaching. And she's developed a hands-on approach to fueling financial confidence in Canadian founders. Her methodology actually took 3 years, which is awesome, to actually to master. So she's partnered with lenders, educators, and incubators across Canada. And we're so excited that she's going to be she's joining us today and facilitating and presenting her program to all of us. So please join me in welcoming Tanya Woods Richardson. And yeah, over to you, Tanya.
Abdallah, thank you so much. Both you and Linda, thank you for the opportunity to be here to actually talk about finances for the next 3 hours. So that sounds rather daunting. So I want to thank everybody on the call, all 108 of you, for showing up and actually walking through this process with us. Before I jump into the Cashflow Canvas, I also just want to acknowledge that Isha is on the call. You can't miss her. She's got the yellow brick background. That's actually a tongue twister when you try to say that out loud and quickly. And if anyone is having challenges, I know a lot of you got the opportunity to enroll in this program in the online course. We saw a lot of you come through over the last couple of days. But if you're having any challenges whatsoever, please reach out to Isha while she's here on the call. She won't be here for the entire call, but here at the beginning, she wants to make sure that you've got everything that you need, specifically for this reason, because we are here for 3 hours together to learn how to build a budget. And I don't want you feeling that pressure of, oh my gosh, we got to build the budget in 3 hours. Like, how the heck are we going to do that? To be honest with you, this is a process that I want you to set aside 12 to 15 hours to get it done. Today, I'm going to show you how to do it. Abdallah and I are going to go through this step by step with you, but I want you to invest the time. If it's 1 hour a week, do that. If it's going to be 2 hours, whatever it is that you want it to be. But why I want you to have that course is because that course is going to take you through all of the steps that Abdallah and I are going to share today. And it's where you're going to be able to access all of your tools on a regular basis. And there's a community of founders that you get to join as well to have discussions around your budgeting process. So I just want to make sure that we've got you on the other side of this. I don't want you to feel like you have to panic and get everything downloaded and try to cram as much information in as possible. I want you to just kind of take your pace with this. I want you to get it done, but I don't want you to feel the pressure in it. So hopefully everybody is good with that. Now,
Tanya, I see a lot of,
go for it.
Questions around the tools and how to download the tools. So if you can please share that with everyone. Thank you.
So you can always reach out with to Isha, who is on the call, if you need additional information. Maybe what I'll do then, just before we get started, the link, I know Linda's put the link into the call, and I hope you guys got all of that information. That was 3 hours presented that I just scrolled through really quickly. Here's the page. This is the QR code for you to enroll in the course. The link is also in the chat. And when it says buy now, you put in this promo code. So you may need to put in your information. You may need to create that account with your name and your email. Then when it asks you to get the course, to buy the course, we don't want you buying it. You're here on the call. We want you putting in this promo code, and that will get you access for free. If you have any questions, Isha is on here to support you on the back end, making sure that you've got what you need there. So hopefully that takes care of that little piece in the interim. Do you think we're okay, Abdallah, to move through?
I think so.
Okay, perfect.
Everyone is okay. Yeah, we should be okay. Good.
Fantastic. Okay, so again, 3 hours to learn how to build a business budget. So we're going to break this down. We're going to do what I call kind of understanding the landscape, and then we're going to go into what I call loading your palette, and then we're actually going to move into an Excel document today. So we're going to pull all of that together. But to get us started, I actually want to go through why building a budget is so important. And so Stella and I are gonna have a little chat around this as we talk about this as well. But one thing I do want to do, I have this little rule of 3 that I always use when I'm doing boot camps like this and we're online. And that rule of 3 is that I look for 3 people to engage with us in the chat to know that we're following along, or at least some of us are following along.
Sorry to interrupt. Are you sharing your screen right now? Because I don't believe I can see it on my end. I don't think you're sharing the screen.
I am not, you're right.
Oh, okay, perfect. I thought
Yep.
there's some comments in the chat for the QR code.
Pardon?
So, I saw some comments in the chat for the QR code. We haven't
Okay.
put it on the screen yet, right?
Sure. Can I just maybe suggest, Linda, that everybody reach out to Isha and Isha can just enroll them. She can get their email addresses and do that manually. Otherwise, we might be here for half an hour, 45 minutes, just making sure everybody's enrolled, if that's okay. The QR code is the link here that Isha has just put in. I can see it in the chat. That's where that QR code will take everybody. Okay. So rule of 3, can I just get 3 thumbs up or a yes in the chat that we're ready to move forward and we are ready to build a business budget for your company? Okay, awesome. Here we go. All right, so I am going to share my my deck here as we go through this because I have some fun slides that I want to bring up here. So a business budget, just so you know, in this world that we are, and nail the numbers, we call it the Cashflow Canvas. And it's actually a 3-part process. And what's important to know here with this process is that this is people powered, is what I call it. So between our coaches that can support you through this, including our business link coaches, we've got Carol, David, Diana, Abdallah here to support us through this. This is a process that I want you to understand before you start leveraging technology, because building a budget, actually, if you've ever tried to do it with AI, the output that you're going to get is only as good as the input that you put in, right? So this is work, believe it or not, that you as the founder really need to engage in these early stages here. So the Cashflow Canvas is a 3-part process that will help you master the art of building a profitable budget. And that's going to be really important. And you're going to see why here in a moment. We call it the yellow brick road to the bank and beyond, because many founders only start building a budget because they need access to working capital. I just want to come to the chat for a second. How many of you are here because you're actually looking for a loan? Anybody here looking for a loan? 1, 2, okay, so you're not alone. This is why most people do a budget. They're looking for that working capital. I want you to build the budget not only to identify how to balance your bank account with working capital, but I want you to build this budget to ensure that your company is going to be profitable. So again, just to reiterate what this process is going to look like, because I don't want you to feel panicked to get all of this information in. Today, we are doing the boot camp. We're going to go through learning the landscape, loading the palette, and filling the forecast. And I'm going to explain what all of those titles mean and what all of the tools look like. As I just mentioned, you're going to have a year access, 365 days access to the actual. Yes.
Would you be able, like the screen you have, the just to make it in one screen, just to enlarge the main slides?
Yeah, I can do that. Is that better?
Oh, perfect. Yeah.
Yeah. Okay. Perfect. Okay. So you're going to have everybody on the call. You have 1 year access to the blueprint. That's going to take you through everything that we're talking about today, step by step by step by step. There's a discussion button in each lesson. And if you need more support, then the crew at Business Link is here to support you. They've all been certified. Abdallah, David, Carol, Diana, they've been certified in this process. So they've got your back if you feel like you're stalling out anywhere on this journey. At the end of this, there's some other things that we can talk about, including how to now get your bookkeeping software, what we call calibrated, because for many of you, this is going to be the first time that you're seeing your numbers in a way that is actually what we call aligned with your books, where your numbers are actually supposed to be filed in your chart of accounts. And then just so you know, every month we do a group coaching call with founders around the world that are all in the process of building their budget. And so this is where we hold you accountable, not so much to building the plan, but how you implement, measure, and then modify your plan as required. Because building your budget is the first step of this journey for you, right? We need to make sure that we're taking consistent action on it and modifying it as we go forward. So this, I hope, is going to be a game changer for you in terms of seeing where all the dots connect and why you actually want to build a budget. I want to just take a step back for a moment and share with you the financial landscape. So financial statements are actually 3 documents. It is the cash flow statement, the income statement, and the balance sheet. Those 3 documents make up the bundle that is financial statements. The cash flow statement, if we start over here on the right, you can see it's a document that is listing all of your income sources in detail, then all of your direct costs, and I'm going to go through direct costs and indirect costs in more detail here in a bit, but all of your income, all of your direct costs, all of your indirect costs, and then you get left with something called net profit. These numbers are typically for a 12-month period. You can see over here, month 1 to 12, that might be your January to December. It might be your fiscal year, depending on whatever that looks like for you. But I want you to know that a cash flow statement is also called, otherwise known as a budget or a plan. And if it's future-based, it's also what they call a forecast, a pro forma, or projections. It all means the same thing. Now, I know to some of you, you're probably like, oh, that's old news, but you'd be amazed at how many founders don't recognize that it's all the same document. So you can breathe a sigh of relief. Right? We're not looking for 20 documents and financial statements. So that's the cash flow. The income statement, for all intents and purposes, is actually just a summary of your cash flow. It's a high-level snapshot that doesn't get into the weeds on income. It's usually just a couple of income streams, couple of direct costs, right? Then you have your indirect costs, and again, what your net profit is. And this is typically for one period over another period. It's either for one quarter over a past quarter. It might be 1 year over a past year, right? But again, it's just a summary of your cash flow. And in the finance world, it is also known as a profit and loss, P&L, a statement of earnings, or if your net profit is negative, it's also known as a statement of loss.
Tanya, sorry, would Aisha be sending out the slides after the presentation? We'll be sharing the recording for this webinar.
Yeah. Abdallah, your business link can share the slides if you want, for sure. Okay. Yeah. Not a problem. With these slides are, just so you know, a lot of what we're covering here is in the blueprint as well. It's not a whole slide deck, but it's picture by picture in the lesson that you're covering, right? So, but again, Abdallah, Business Link can absolutely send these out if they wish to. Okay, so now we've got the income statement. Income statement is just a summary of our cash flow. Now the balance sheet. The balance sheet, if you were all on video right now, I would be asking you, because I'd want to see I want to see body language, not business language. I'd ask you if you're familiar with a net worth statement. So in our personal lives, we have something called a net worth statement, right? All of our assets, including what's in our bank account and our property and our art and our bicycles and our cars and our retirement, all of our assets minus all of our liabilities equals net worth. Right? That's on the personal side. On the business side, they call a net worth statement a balance sheet. That's it. That's the exact same thing. All of our business assets minus all of our business liabilities equals equity. So the only difference is in our personal budget, it says equals net worth. In the business budget or in the business finances, it's called equals equity. So why this is so important, and I'm stopping, I was going to stop share. I wonder if I'm just maneuvering because I want to see here. So rule of 3, how many of you on the call actually see your business as an investment? 1, 2, 3. Boom. I love it. Okay. This is why we are building the budget, everybody, is because the net profit that we generate, to generate net profit in our business, we actually have to plan for it. It is not the afterthought. And unfortunately, way too many business owners wait until 4 months after year end to see what the accountant comes back with. We are going to teach you, Abdallah and I are going to teach you today how to budget for net profit. Because what happens when you generate net profit, it's not extra money to spend. And by the way, this is net profit after you've paid yourself, right? It's not, oh, generate net profit and then you take your dividend. I want you to have net profit, because what happens with that is it goes over onto the balance sheet into a category called retained earnings. And then when your retained earnings start to build, right, you have an emergency fund, right? So you can weather global pandemics, you can weather tariffs, right? You've got money that's set aside. But what actually starts to happen as well is it starts to increase your equity position of the business. It starts to increase the value of your business investment. Your business investment is going to be the most important investment that you make in your lifetime, and you can control the rate of return that you are making on that business investment, unlike anything in the market, because you get to control the net profit that you're generating on it. And that is why we're building a business budget together today. Abdallah, is there anything you want to weigh in on that piece?
No, I couldn't agree more. I think it's all about just making sure that that the business, to have a viable business, it has to be profitable. To have a sustainable business, it has to be profitable. And profitability comes with the simple dynamics of actually structuring your cash flow and making sure that you've accounted for everything, including, as Tanya said, your own salary and wages and so on. Because it's time that you are going to be spending on the business yourself as a founder and a business owner. So profitability is key for sustainability.
I love that you mentioned that, Abdallah, because I didn't, in my intro, typically I share a little story about how I actually came about to create the Cashflow Canvas. And long story short is because I had a business that went down. It went down in 2008. I've been running it for 7 years. We had top line sales. So we were strong in sales, but we had zero profitability. And so it took me 2 years after it went down. I went back to school and I studied financial modeling. And that's when I realized that my financial model, everything that you're learning here today, it was broken. And so for every $100,000 I made in sales, I was losing 105. Right? And it's because I didn't have this financial plan together. So Abdallah, you bring up a great point, which is to succeed in business, it is not just about sales. You have to have the profitability. Without profitability, you won't make it to the finish line, right? With sales, you can tread water, but as soon as something happens, your business goes down. So profit is what we are aiming for. It is not greedy. It is not opportunistic. It is not capitalistic. It is what is going to ensure your survivability. And it is also where your impact comes from. It allows you to give back in the world once you've got your oxygen mask on, which is your profitability, and you know that your company is safe. Okay. Really high level. I just want to show you this because when we move into the Excel document, it's going to look a little different, but it's all these same components. So as I've already mentioned in a cash flow, 12 months across the top, then you have your revenue streams. Now we're going to be breaking out revenue streams, right? We're going to be breaking out your core revenue streams. And then what we're going to do is direct cost per revenue stream. When you take revenue streams and you subtract direct costs are those costs that are directly attached to selling each revenue stream, we end up with what we call gross profit. This is the profit everyone talks about because there's some money there, right? So when you're at a networking event, I've got a profit margin of 65%. This is what they're referring to. Then from gross profit, we subtract all of our indirect costs, also known as operating expenses, or fixed expenses, and then we get left with net profit, the bottom line. And our objective with net profit is to make sure that we've got net profit at the end of the year, but we might have some months where we are not profitable, and that is okay. And we're going to talk a little bit about that in our final segment here of the cash flow canvas. The opening cash balance means what is in the bank account at the beginning of the month. And then the closing cash balance based on your net profit is going to be what is in the bank account at the end of the month. So this is just a really simple snapshot of what a cash flow forecast actually looks like and the components that come together to make that up. We're going to be using these 3 tools. So our 3-step process, learning the landscape, which we're doing right now. We're actually going to go through these 8 building blocks together. I'm going to save that time right now because we're going to go through these in more detail as we go through the program. I am going to say that in your course, right, you've got all the tools there. There is a tool that is called the sketchbook. I'm going to encourage you to print it off and do the work with a pencil or a pen. It uses a very different part of your brain versus doing a fillable PDF. So if you can print it off, 80% of your work will actually be done in the sketchbook, because the sketchbook is about roughing out all of these numbers. It's about ideating and testing some of your concepts and getting messy with the numbers before we move into step 3, which is now bringing everything over into Excel. When you spend all of your time in your sketchbook, Excel will literally take you 10 minutes, right? Maybe with a few little tweaks here and there, but it is very easy for you to get clear on the numbers that you're using. And for those of you that are looking for money, using the sketchbook to draft all of this out is going to make your numbers defensible. So when you go and speak with a lender, you're going to be able to clarify why you're using the numbers that you're using in this particular process. The 8 building blocks, again, we're going to go into this in more detail with each one of these, but on the bottom, just so you know, of your palette, we have these 4 building blocks that are all indirect costs. So you might be familiar with, if you go to your income statement or your profit and loss and you look at operating costs, also known as indirect costs, you might be familiar with them all being alphabetized, right? Everything from accounting or advertising all the way down to vehicles. We've split them out into 4 categories specifically so that you can measure, because now you're thinking like the investor, right? And you're trying to increase the value of your business asset. We want you to be able to measure the return on your investment in each one of these categories. That's why, for example, marketing is going to be its own category where you're going to be able to budget for all of your marketing expenses, including your advertising and promotion. But then what you can do is you can take that total amount that your spend is on marketing and then divide it by your total sales, and it's going to show you what your ROI is. And you don't want to break even on marketing. You want to make sure to at least get a lift of 25% or more, right, on your marketing initiatives. So that's why we're breaking those down.
Yeah,
On the
ROI
top,
is return on investment. So.
ROI, thank you, Abdallah. Yeah, ROI, return on your investment. And then just really quickly here on the top, you can see that we have revenue streams, direct costs. So we break our direct costs down into 2 different categories. Category A is materials, inputs, and subcontractors. And category B is all of our labor, our direct labor that goes into selling each one of these products and services. And then we're going to show you how to come up with a profitable price. It's called the weighted pricing process. And it's a 3-step process that we're going to show you how to do. You won't be able to do it on the call because you're going to have to do some research and get a team together to be able to do this work. But we're going to show you what the steps look like. And then we have what's called sales assumptions. And sales assumptions are knowing how many units you're going to sell, when you're going to sell them, and when is that revenue going to be received. Today, we're going to focus on this triad here, which I call the Bermuda Triangle of budgets: revenue streams, direct costs, and price points. It's where profits perish and dreams disappear. This is where every single founder we have worked with has recognized that that is where they've been losing money. So we're actually going to do a deep dive today on these 3 areas because this is where you're going to get the most value out of building your business budget. Abdallah, any questions coming in or anything you want to weigh in on?
I don't see any questions, but I agree with you, Tanya. Like the main building blocks for profitability is making sure your sales are covering your expenses. And expenses are obviously direct, meaning whatever you're selling, which we'll obviously cover during this workshop. And then there's obviously the indirect cost, which covers other aspects of your business. So
yes. And that we want to be left with a profit at the end, right? So it's not just about covering our direct costs and our indirect costs, but being left with a profit. So I'm just going to come back to this for a second, because a high interest savings account right now in Canada would get you 4.5 to 6%. And in our experience, 89% of business owners are making less than 3%. Less than 3. High interest savings account, 10 minutes to open it up, it's 100% guaranteed. Most of us in Canada with our business, we're building a business investment that's getting us less than 3% for 40, 60, 80 hours a week and 100% exposed, right? So if we're thinking like the investor, we're like, maybe not such a hot investment. Today, we're teaching you how to strengthen that investment, right? Through going through these 8 building blocks. Okay, so
just on
now we're going to
profitability, Tanya, like, I know there is obviously making sure that you're above the value that you're getting from, let's say, a savings account. But there are other factors, like if you're opening a daycare versus opening a like a restaurant. So there are also some industry kind of standards in terms of how much profitability you should be expecting from those types of businesses.
Yeah, that's a really great point. Sometimes with industry standards, I'm speculative, because industry standards report on all business owners, and it's estimated over 80% of business owners go down after 5 years. So I'm not entirely confident in the benchmarks that were given through like NAICS codes, but it's a great place to start. But I want everybody to know what they want their profitability to be. And Abdallah, this too is why we do the wake up call challenge, right? 4 times a year. We've got one coming up in November. They're completely free, but this is where founders build their personal budget. Because when you build your personal budget, you're going to see how much the business needs to pay you every month, what your retirement shortfall is, right? And why we want you to see your retirement shortfall is because now you will know that you need to turn your business into an asset that's going to be worth X by the time that you want to retire. Because for many of us, our business is going to be that only path to retirement. So now we've got a goal and we're aligned with that goal. So, sorry, little rabbit hole down there, but it's really important for the business owner, for all of you on the call, to know what it is that you're building, because your numbers will take you there. They are your pathway. They're your yellow brick road that shows you exactly how to get from where you are to where you need to be. And just a shout out to Skip the Dishes. Way back when, in my 30 years of working with entrepreneurs, there's only been 2 founders, honestly, 2 founders that have been able to answer, like, what are you building? Right? How much do you want your business to be worth? By when? By having what impact on whom? And through what products and services? And Skip the Dishes was one of those businesses. They knew they wanted out in 5 years for 10 million plus, and they knew what they were doing on the other side of that. So having a goal with your business is key, and not just picking this arbitrary number. Okay. All right. So indirect costs. So we're going to start on the bottom of the palette. Indirect costs, I've already mentioned, they are also known as operating expenses, right? OpEx, fixed costs, overhead. If you ever get asked, like if your lender's asking you.
There's a question. It's probably similar to what we've just been discussing. It's from Jessica. Okay. How do you balance between what to expect versus competition?
Okay. I'm not entirely sure I get the question.
So it's basically about expectation versus what other competitors are making, I guess.
Okay.
Or Jessica can unmute if she wants to elaborate more on the question.
Jessica, do you want to unmute just to make sure that I get the question and I'm responding appropriately? Or I can give you my best guess. So I think what a lot of us do, and you'll see this when we talk about pricing, what a lot of us do is we go to look at our competitors and we gauge our, not that we just gauge our success, but we try to build our model based on what we think our competitors are doing and doing right. I want you to know your own model. I want you to know your own numbers, right? And what needs to happen for you and to budget for you, right? We really are in this race on our own. We can certainly do analysis on what the competition is doing and maybe some of the lessons that, they may have learned. But it's really, we're in our own race. And I've always said that I feel that business success is more a journey of personal discovery than it is business development, right? We learn so much about ourselves in this process. And so I want this budget for you to be about what you need to achieve, right? Where you need your business to be, because that's what you can control, right? And be able
question
to.
was, she kind of, sorry, Tony, jumping in again.
Okay.
Is what do you want to make versus like competitive pricing? Like, I'm assuming like if you're opening a restaurant and someone has set prices for, let's say, I don't know, pizzas, would you, and you want to make so much profit, but you're kind of limited by the pricing that's been set in the market, if I'm understanding the question.
Yeah.
Right. Yeah.
So maybe, Abdallah, what I will say here is maybe let's park that for pricing when we get into the weighted pricing process, because I think once we go through that process, it'll all make sense for everybody, right? But I love the question because to be honest with you, when it comes to the Cashflow Canvas, a lot of founders want to come in and do pricing. And if that's all you want to do, that is A-okay. And again, we've got our team at Business Link that can support you through that specific building block, because it is a lot of fun, right? And a lot of founders are really excited to do that piece. But you're going to soon realize that we have to build some of these other building blocks out to get a really accurate read on what that pricing needs to be. All right. So if we come back to the bottom of the palette, we're going to focus on the indirect costs, and just a couple of key points here on indirect costs. You've got to remember in your mind that indirect costs are the expenses that your business is going to incur regardless of any sales being made, right? So it's things like your telephone, it's things like your rent, it's things like your business insurance, it's things like your employee salary. They need to get paid regardless of whether there's any sales in the business. So first and foremost, I need you to put that thinking cap on. And why we're budgeting for these expenses is obviously to make sure that there's always enough money in your bank account, right, to cover these obligations. That's why we are doing this. The other key point here that I want you to remember is that many business owners that we work with, when we do this work one-on-one, they have under budgeted, right? They have forgotten some of these details. And what's going to happen is that if you are not honest with your budget when you're building it, and you're like, I'm going to skip that cost, the only place that that expense can actually be pulled from when the invoice comes due is from your net profit. So you are not doing yourself a service by not including the expense in your budget. You're doing yourself a disservice because it's going to erode your bottom line at the end of the process. So I just want to see a rule of three. Can I get 3 thumbs up that message landed? We want to budget for all the true costs so that your bottom line is protected. Yep, yes, great. Okay, awesome. All right, so the first thing we're going to budget for is team and personnel. This is the toughest of all of our indirect costs. So I just want to go through and make sure that we are super clear on these expenses. So team and personnel costs are all of the indirect costs. Remember those fixed expenses that your business is going to incur to recruit, train, and retain your employees, right? Really important term here. So before I get into the slide a little bit more, I want to make sure that we're all clear on language, because in the cash flow canvas, well, in every single business, we have what we call human capital, the people that we need to recruit into our business. And it's important that you realize that there's 3 categories of human capital. There's category 1, which are all of our employees. These are people that we hire into the business to do a plethora of duties that will keep the business rolling. The big thing with employees is that they are going to be getting a paycheck. So a couple of things, sometimes a letter of offer goes out, you're setting the salary for them, right? Or the wage, that compensation, you're letting them know what needs to be done, when it needs to be done. You're giving them the equipment to get that work done with. They are expecting you to pay them through a paycheck. And if these are employees, now you are also responsible for something called payroll deductions, right? The employer's portion of payroll deductions. The next category of human capital is what we call a consultant. So we've got a consultant and we've got a subcontractor. Both of these people are, they are going to be invoicing you for their work. They typically decide what success looks like, how many hours they're going to work, when they're going to work. They're using their own equipment. They're carrying their own insurance. But the difference between the consultant and the subcontractor, the consultant is actually working with you on the business operational side of things, right? So consultants include people like bookkeepers, your social media consultant, might be a business coach, it might be an HR consultant that you bring in to help you manage your team. Those are consultants. They're helping you on the business end of things, but they are invoicing you for the work that they are doing. The subcontractor, exact same, they're invoicing you for the work that they're doing. They're carrying their own insurance. They're paying their own source deductions, but they are people that you bring in to deliver a product or service, right? They're delivering a revenue stream for you. So for example, if I'm a home builder, my subcontractors would be my roofers, my finishers, my framers, my millwork people, right? Those are the subcontractors that are delivering the product or service. A consultant is helping me on the back end. They're my bookkeeper, they're my social media, they're my business coach, they're my HR consultant. That is the difference. Can I just get a show of hands in the chat? Does that make sense to everybody? It's really important that you understand the difference between employee, consultant, and subcontractor. Everybody's got it. Awesome. If not, is a little bit of a doozer, reach out to Business Link. Again, Abdallah, Carol, David, Diana, and they can support you through that. But really important that we get that piece figured out. The next piece that you're going to have to figure out, and we're actually going to do this together right now before we finish or before we walk through team and personnel expenses. Payroll deductions. So payroll deductions, this is the amount that CRA comes knocking at the door for you, the employer, to pay above and beyond the rate that you've negotiated with that employee. Right? So we might say, I'm just going to use easy math. We might be hiring, and this number, nobody would get this person anymore, but $10 an hour. I'm just doing easy math. You hired a admin assistant. They're going to be an employee, $10 an hour. We now actually have a financial obligation to pay above and beyond that 10. We have to pay all of these percentages. So right now, I want you to do this math with me. And in Alberta, so if you're not in Alberta, pick your province. And unfortunately, if you're in the States, I think I saw someone call in from the States. I want you to reach out to your HR professional because payroll deductions in the States are above and beyond anything I've experienced. It's right down to the municipality of the city, right? Like it is crazy. But because 99% of our people on the call are from Alberta, let's do this math together. So EI is
sorry. So payroll deductions are for the category of employees. Yeah.
Yes.
So,
team and personnel. And
team
thank
and
you.
personnel working inside the company.
Inside the company, employees only. And you'll see how this is all going to make sense here in a moment. I know I've jumped a little bit, but I want you to understand how this is all going to come together. Thanks, Abdallah. So in Alberta, for employees only, EI is employment insurance. It's federally regulated. It's the same in every province with the exception of Quebec. Every year it changes. So be mindful in 2026, these numbers are going to change. So we're going to add 2.29. CPP, Canadian Pension Plan. In Alberta, again, federally regulated, 5.95. We're going to add that. Vacation pay, it depends on seniority, so anywhere from 4 to 6. So I'm just going to take the average in this example, and I'm going to take 5 and add that. Again, now that's by province. And then we have workers' compensation. In every province, it's called something different. And just so you know, this is the average in each province, but I want you to reach out to your bookkeeper and ask them specifically what is the industry insurance rate that you need to budget for. So today we're going to take the basic 1.36. And again, in your follow-up action plan, just write, oh, I need to reach out to my bookkeeper and ask about WCB. So what I get is 14.6%. So in addition to the $10 that I now need to pay for that employee, I now need to budget an additional, right, 14.6%. All you need right now is just the percentage. I just want you to know your percent, right? Now, if you're a sole proprietor and you're doing this and you're thinking about yourself, I'm going to encourage you to put these numbers down, right? Better to budget high than low. But right now for sole proprietors in Canada, CPP is your only obligation, and you need to budget 11.9% of your earnings, of your budget for that. So of your salary.
So Tanya, this would be like whatever the hourly wage you agree with that with your employee, it will be plus 14.6%, right? So it's above that hourly wage that you've already agreed, and you budget it as an expense, but it's not paid out as cash to the employee. It's part of your budget because you need to account for it, and it's what you will pay towards EI and CPP and vacation days and WCB.
Yes, CPP. This is where on the employee's pay stub, you might see it on your own. You see all of these deductions. So it's calculated on the employee's pay stub, but it's getting paid to CRA. Right? So that's the difference there. Okay.
So there's a question in the chat. If you don't have any employees, do you still need that?
Yeah, if you have no employees, then you're right. You do not need to budget for it. But I'm going to encourage you with this budget. I'm going to ask you to get real about, does this business need help? Because the only way you can scale is typically through people. And I'm going to show you at the end how you can reduce expenses if you need to, because I know right now a lot of you are thinking, oh my gosh, I don't have the money, I'm not going to budget for it. But I want you to think about if your business needs that admin support, if it needs the marketing consultant, if it needs the bookkeeper, I want you to see what it's going to take to actually get yourself in that position to be able to afford those expenses. And then we can start reducing them at the beginning. I'm going to show you that at the end. So I have never met a business owner that doesn't need people. I've never met a one-person team that's able to scale. So I'm going to ask you to start thinking through that.
We have a question, Tanya, from Destiny. How do we account for out-of-country virtual assistants?
Sorry, out of what?
Out-of-country virtual assistants. So if you have a virtual assistant overseas, I guess, that you're tapping into their services, how do you account for that?
So let's talk about that. We'll do that right now, Abdallah. So here's the assignment for everybody. This is, again, is why I've asked you to budget 12 to 15 hours so you can start getting all of this work done. In your sketchbook, you are going to come to your team and personnel exercise. This is what your page is going to look like. The first thing I want you to do is I want you to list out all of the roles that need to be filled. And so to Destiny's question here, I've got virtual assistant, right? So I want you to list the roles. I don't want you to list the name of the individual. I actually want you to think like the CEO. You, by the way, are likely going to be the general manager of the business. And if you've got partners in the business, you need to understand what partner is doing what, right? What is the title of that role? So you're going to list all the roles needed. In this example, I've got general manager, virtual assistant, salesperson. Then the next thing you're going to do, now that we've gone...
Yeah, perfect. You've already done that. Yeah.
Now that we've gone through understanding those three categories of human capital, the next thing I want you to do is I want you to indicate whether this individual is going to be an employee, a consultant, or a subcontractor, right? So in this case, the general manager, I'm checking off employee. For virtual assistant, I've done employee, but Destiny, in your case, if this person is working in another country, I'm quite certain they are going to be a consultant. And again, the rule of thumb is if they're invoicing you, they're the consultant, right? Or the subcontractor. They're not an employee. And before I forget, it's very important I know that we're talking about us identifying, is this person an employee or a consultant? CRA at the end of the day has final say. And so in the course, in the Cashflow Canvas course, you're going to notice a document. It's a CRA checklist that I'm going to encourage you to go through, because if CRA comes in and says, oh, they're deciding the hours, they decide when they work, they're using your equipment, you're deciding what success looks like, yada, 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 and CRA says this person is actually an employee, they can come after you retroactively for source deductions. So you don't necessarily get to pick. I want you to check that checklist, because you need to be very clear that you are meeting all of the CRA guidelines, that yes, this person is actually a consultant. So I just wanted to put that out there. So step one, you're going to list your roles. Step two, you're going to indicate whether this person is an employee, a consultant, or subtractor. Step three, if you wish, you don't need to for your budgeting, but if you wish, you can list some of the key responsibilities of each one of these roles. Step four, you are going to list a fair market rate for that individual. So, and this is in the academy, and I'm just going to slip back. This is where you can go to AI, and this is the prompt, right? What is the current? And so you can put 2025 fair market rate for a insert title, general manager of a financial education business located in, and then put your city. And then please cite the source, because I learned last week that AI has what we call hallucinations. That's what they're called. Hallucinations, where they start to make up information, and they apparently have been making up sources. So I want you to put in this prompt, and then I want you to cite the source, and I want you to go to the source and ensure that the information is accurate, right? So
we have a question from Yvonne on owners. Like if you're incorporated, the question is, if they're incorporated, they're two owners of the business, are they treated as employees? And obviously, if they're treated as employees, would they still add those 14.6% to their pay or wage?
Great question. Yeah. So what I'm going to ask of you today in your budget is, again, if you're two partners, I want you to understand your role. And I know this is very foreign for us right now, because most of us as founders, we just take what's left at the end of the month. We take the scraps, we take whatever the business can afford us. I want you to realize what your budget should be. If you had to hire someone to replace yourselves in the business, what would that number be? I want you to budget for that. I know it's uncomfortable, but I want you to see what the business would need to be doing to ensure that you were actually paying yourself a fair market salary, right? We can always change it after. We can always change it, but I want you to see what that number is, because it's going to motivate you. Usually it's like, wait a minute, because the average salary right now in Canada of a general manager, a founder of a business, is $57,000. $57,000. The average salary of a general manager working as an employee within a major company or a best in sector company, $127,000. I don't want to tell you how much you should be making, but I want to be making over 100,000 for the work that I'm putting in, right? So this is what I want you to budget for, right? We can always change it at the end.
Tanya? Like just average salaries per job?
Where did I find it?
No, where can you find it? Like for someone who's looking to budget and, you know.
Again, so you go to AI and you ask, what is the fair market? Again, the prompts are all in the course. What is the fair market salary for a general manager in this industry, in this location, 2025? Please cite your sources. And it's going to go to Glassdoor and PayScale and Indeed, and it's going to show you all of those sources. And it's going to say, they range from this amount to this amount, so the median is this amount. And then just go double check that all of that information is actually correct, and that's what you get to budget for. And when you're looking for money, the lender expects you to know what that fair market rate is, but then the lender, just so you know, is also expecting you to know what your need, we call it what your needs are, right? So they want you to do a personal budget and say, I need to be bringing home X dollars every month to ensure my financial security at home. The lender typically expects you to know that. So they want you to know that you've got your fair market rate. And then they also want you to know what your personal budget is and how much you need to be extracting from the business. So I'll just put that out there. I was a former lender, so I get this. I get exactly what they're looking for here. So then you're going to put the rate, and then you're going to put how much time is required of this individual, how many hours. And then when you multiply this, we can now see that we're going to see what that anticipated monthly cost is going to be. And I'm going to have to go to the chat because I deleted it off my calculator. Under payroll deductions, I have 14.78. But what group, everybody on the call, our crew here, what did we come up with? What was the number that we came up with when we did the math on payroll deductions? Let's see who is paying attention in the chat. 14.67. Awesome. Kathy, Sherry, Mode. I love it. Woo! You're awake. Great. So that's what you're going to be putting in here. You just need the percentage. That's all you need. That's it, right? So we're just going to put the percentage in there. Then just to wrap up on team and personnel costs, you will see in your workbook, again, there are going to be a number of other costs for you to consider, such as benefits, bonuses. So these things aren't they're not obligatory, right? The CRA isn't saying you have to have benefits for your people. So I just want you to think about, if you wanted to budget for these things, what would they be? Benefits, bonuses, organizational culture, which is if you want to celebrate your team, if you want to take them to dinner, celebrate anniversaries, birthdays, do a summer barbecue, do a Christmas event, what would that budget be annually? Recruiting, training, and team meetings. You're going to see in your sketchbook, they're all listed there for you, right? I just want you to start putting numbers to what those line items might be. And if they're not a part of your budget, then don't add it. But I just want you to start thinking outside of the box. So that's team and personnel costs. Can I get in the chat 3 thumbs up that everyone's feeling okay with that? Sorry, I see a question here
from Lisa. WCB doesn't provide me a percent. It says $2. Do I then add 2 to the base rate I'm paying an employee?
Yeah, you could definitely start with that, but I would certainly reach out to your bookkeeper or your payroll administrator or WCB themselves and just say, can you please provide clarification? Is that $2 per hour? Is it $2 per week? Is it, so that you've got a better sense, and who needs to have WCB? So in Saskatchewan, it's actually every director of the organization. Every director needs to have WCB. Right? In other provinces, that is not the case. So just get really clear. By the way, when you're building your budget, I want you to do what we call a down and dirty. I want you to get your first draft down. I want you to get all your numbers in, even if you're guessing at them. And then you start going down the rabbit holes. Then you start reaching out to WCB, and then you start tweaking and perfecting your numbers as you go along. But absolutely, I would reach out and get clarity on that number with WCB. Okay. All good, Abdallah?
Yep, all good. So
awesome.
Team and personnel, first expense.
Team and personnel, we are good. Anything that you wanted to add on team and personnel?
No, I think that kind of covers all the main categories as you've said. Like, so it's either employees or contractors or subcontractors, and then accounting for that. If you're an employee, you would add obviously all these payroll deductions, depending on where you are.
Awesome. Awesome. Okay, everybody. Thank you, Abdallah, and thanks to everybody on the call for hanging in there. I want to get through these last building blocks here. These are going to go a lot faster, just so you know. Team and personnel is the doozy, right, to really get through when we're talking about indirect costs. Space and operating, they actually go a lot faster. So if you're a company that's already been doing business, I want you to go to your income statement and take a look at all of the expenses that you've had before, right? You can go line by line and saying, okay, that's what we spent this year. This year, do we need to increase it a little bit or no, right? Or is that expense gone? So that's an easy way to do it. If you are brand new to business, I'm going to ask you to think about these things. But again, in your sketchbook, they are already listed out. So just a couple of areas that I want to drill in on space and operating. One is your rent. So oftentimes for small business owners that are working from home, if you're working from home, I'm not going to ask you to include your rent. You're not going to budget for your office space in the house because that's what we call a tax write-off. At the end of the year, we get to write that off. But in your cash flow, that money, you aren't literally transferring $100 from your business budget to your personal bank account, from your business bank account to your personal bank account for space, right? If you are, then you can budget for it. But if it's not coming out of your bank account, we're not going to budget for it. One thing I am going to ask you to do, though, is that if you are working from home, I'm going to ask you to think about, do you need to budget for a mailing address? Do you need to budget for boardroom office space? Do you need to budget for co-working space, right? Because oftentimes there's these additional costs that come in when we are working from home. The other thing I want you to think about is insurance. So a lot of business owners are either paying way too much insurance. Most of them aren't paying enough. So again, on your follow-up action plan, by the way, I should point out your follow-up action plan, if you go to your workbook, it's on the very last page. And this is where you can now start to write all the things that you want to dial in on after you get your first draft of your budget build. So I would encourage you to reach out to your broker and just remind them, this is the business that I'm in. Here's the changes that I've made. Are there additional types of insurance that I should budget for? In the course, you will see that we list all the types of insurance that are available for you. Reach out to the professional and then make sure that you're properly covered. Bank fees. In your space and operating costs, the only bank fee that you are going to budget for is for your monthly account fee. So it costs you something to have a bank account. It's probably anywhere in the range of $25 to $50. That's the only fee that we budget for here. Interest costs are going to be budgeted for in other. And your merchant fee, we're actually going to talk about that when we get to direct costs here in a bit.
Of questions, Tanya?
Yeah.
We have one from Mandy. Typically, we pay rent plus triple net. What does triple net typically include?
Well, that's a good question. But it's typically a lot of the operating expenses, right, to actually run that space. So I would just get very clear with the landlord exactly what's included in there, have them run through all of that with you, and then take that number. They might be giving that to you on an annual basis. So then divide that by 12. Right, depending on when that's going to be due. Typically, they encourage those fees to be paid for on a monthly basis.
Gotcha.
But it's the operation of the space.
It's operation of the space. Okay. And then we have one from Alexander. If my startup is on tier 4 and I'm working with no office on the ground, what taxes can I save on that? Second, business insurance, what amount am I obligate? Alexander, if you want to clarify your question, you feel free to unmute and ask if you like.
There she is.
Hello, can you hear me?
Yeah.
Can you hear me?
Yes.
Hey, Alexander.
Yeah.
Tanya, thank you for your time. Abdullah, thank you. That's very important. I am in that stage. You're right. Hit me with those questions. I'm working myself. I have a partner. He is not in Calgary now. And I'm doing that my startup for nano materials. And only with that stage, City Calgary has some project with me, and they're asking me to have a insurance for $5 million. I find out it's very expensive because it's almost $2,000 I have to pay for that $5 million. I'm thinking that's any obligation for insurance should be for that one if I want to do that project, or what recommendation you have? And second one, what taxes I can save if I have no office yet? Maybe
Okay. So yeah, I'm not, so on the taxes, I'm not even going to venture into that because I'm not a tax accountant and I don't want to steer you
Okay.
incorrectly there. So I would definitely reach out to your accountant and or a tax planner specifically on that specific conversation. The
I was
other
just
thing that
also
you're
gonna add,
talking,
sorry, Tanya, on the tax side, there's
yep,
also like a client liaison officer. It's a free service by the CRA. If you go to the CRA website and you can have a personalized kind of support, it's one-on-one and it's free.
amazing, Abdallah.
Yeah,
Thank
I'll
you. That's
share that
great.
in,
Great
I'll share that
feedback.
in the.
Yeah, if you put the
Fantastic.
link there, would be great. Thank you so much.
That's great. And so, Alexandra, the other part of your question, or the first part of your question, that's going to be a direct cost conversation. So if this is a project specifically that you're looking to run, and they want you to carry that liability insurance for that project, that ends up being a direct cost attached to that project, not necessarily a fixed operating expense,
Uh-huh.
right?
Got it.
So we're going to cover that when we get to direct costs. So that, yes, we'd have to put that into direct costs. It's probably going to impact your pricing, right,
Mhm.
of that project, but you'll see that when we get to that one specifically.
Great, Tanya, thank you. Because I
Okay.
was thinking I am obligated to keep that 5 million with me, which is I don't need it such a small startup.
Yeah. Okay. Good stuff.
And one more question: where is that book? Everybody asking you in chat. Where is that book we can get?
That book is part of the tools that you download, right,
Okay.
with the Excel sheet. So it's called the sketchbook. It's under download your tools in the course. And then you've got the sketchbook, and then I'll show you how to bring everything over to Excel. But it's in the course under download your tools. I think it's the second lesson in under get ready.
Gotcha. Thank you. Thank you so much.
Okay, you're welcome.
Thanks,
Okay.
Alexander. We have two more questions, Tanya. One from Sophie. When a business is home-based, do we include all utility and mortgage rents cost to the budget, even if we only write off a percentage of that at tax time? So if it's a home-based business, do you include all the costs?
The answer is no. Yeah. If the money that is a tax write-off at the end of the year, right? If you aren't literally transferring that money out of your personal bank account to pay your if the business isn't paying your personal bank account that amount, we're not budgeting for that. Right? It's a tax write-off only. The only exception to that might be your internet and your phone. Right? Maybe you're paying for your internet through your bank account, right? Because you need it. That's what I do, right? Like with the home office, the business pays for the internet because 95% of the internet use is for the office, right? It is for business, and the business pays for my cell phone, right? That does not come out of my personal budget. That comes out of my business budget. So for all those sole proprietors out there. Okay.
One more question from
Okay,
Clayton.
and then go for it.
I'm a drop shipper. My expenses are basically a server and the domain, like a yearly domain ID that you need to pay for. Like to automate taxes and all other people. I guess the question is, if Clayton, if you want to mute and just clarify your question, like what I'm assuming the question is around what are the expenses for like a drop shipping business?
I'd like to automate everybody that got in the business.
You'd like to
automate every other employee.
Can I maybe make sorry, I didn't quite get that.
I'd like to automate all of the employees, including the accountant, everybody that don't need it's a liability.
Okay. Well, I think the point there, Clayton, is again, sometimes we don't always get to decide who these people are, like with respect to that liability issue, right? Whether they're employee, a consultant, or a subcontractor. I'm not sure if you mean with automating, getting everybody paid for on an automatic or an automated process. That I would reach out to your bookkeeper or whoever's doing your payroll to make sure that is all established. With accountants and bookkeepers, those will not be employees. So they'll be invoicing you, and those invoices will need to be paid on a regular basis. I usually advocate for sitting down, if you're doing all of your accounts payable, sitting down twice a month and getting funneling all of those invoices into those two streams twice a month to get everything paid, and or automating it. But if you are going to automate any sort of payments, I would definitely make sure that you are reconciling and going through the invoice to make sure that all of the information is accurate before it gets paid. That's what's happening in our world with automation now. Things just, come up and we're not double checking that the numbers are actually correct. So we got to be careful with that. All right. I think maybe if we can, we've got some catch up to do. We're a little bit behind here, but I will stay after this workshop to make sure all the questions are answered. I don't want anybody feeling like they've got a burning question that isn't getting addressed. But if we're okay, if we can work through these indirect costs so that we can get into the Bermuda Triangle, because this is where we're going to find a lot of the gold and the profitability that you're seeking. Okay, so general operating costs. With respect to bank fees, it's only going to be that monthly account, that monthly amount that they charge you to have your bank account. With bank fees, oftentimes you'll see a big monthly statement that might be 20, 25 pages long, and it typically includes interest carrying costs, something called merchant fee expenses, the expenses that they are charging you to accept credit card payments. Those expenses we're going to budget for in direct costs. We're going to leave those there, right? So bank fees is only going to be what you get billed to have the bank account. Software and hardware. I want you to actually write a list out of all of the software that you subscribe to for your business. You'll probably be amazed when the list comes out. It's things like QuickBooks. It might be that you have your Microsoft operating business platform. You might realize that you've got a CRM platform. You might realize that you have payment software. You might have AutoCAD. You might be something for your specific industry. You might have Vimeo, Canva. We run on software. So I'm going to encourage you to actually build a list and then write out when those subscriptions actually renew and how much each one is, and then add them all up, and that's going to be your monthly software budget, right? You might realize that you've been subscribing to a lot of software that you haven't even used, and it's time to get rid of it. So keep your eye on the software, because the number is probably going to be a lot larger than what you had anticipated it being. Hardware is going to be these expenses that are, they're usually just small technology pieces, right? A laptop, lights, microphones, podcast printer, scanner, pieces that are typically under $1,000, not big capital investments. So I want you to make sure that you're budgeting for those pieces. And then vehicle expenses. Just the rule of thumb here with vehicle expenses is that if your company owns the vehicle, you can budget for everything related to that vehicle. You can budget for the oil changes and the tires and all the kilometers and the lease and the maintenance of the vehicle. You budget for the car washes. You can budget for all of it. If the business does not own the vehicle and you personally own the vehicle, right, including sole proprietors out there, what you're going to budget for is kilometers. So the anticipated number of kilometers that you expect to use for business purposes per month, right? Business purposes. So that would be that would be like going to a client's office or for travel purposes, right? If you're traveling somewhere for a conference. So I want you to think about how many kilometers you're going to use, and then you multiply it by 72 cents per kilometer. And that is what you get to budget for if you personally own the vehicle, not the business, right? So that's what we're doing under space and operating. Then under business consultants, right? All of those business consultants we talked about, like the bookkeeper. I'm going to hold off on marketing for a second. So if you've got business coaches or bookkeepers, this is what we include under business consultants here, right? So space and operating, go to your workbook. There's going to be line items for each one of these. I want you to think about what is that cost that you want to budget for, and that will take you through space and operating. Adela, before we move on to the next one, any quick questions on vehicle?
Yeah.
Or, sorry, space and operating?
Yeah, a couple of questions. So is point of sale something included? I will be opening a food service company.
Beautiful. So point of sale, you might have two expenses with point of sale equipment. You might have the rental equipment of the point of sale, like equipment itself. They might be charging you a rental fee for that. And then you're going to have the point of sale, which is what we call the merchant and transaction fee. That we are going to budget for in direct costs. We're going to leave that in direct costs, which I'm going to cover here in very shortly. So hopefully that answers that.
And for travel, does that include driving to and from your business?
I am going to ask you to defer to your bookkeeper on that. So with an account, with incorporated company, it does not include me going from the house to my office, but it would include the office to a client meeting, right? I want you to just refer to your bookkeeper on if it now includes, if your home-based office, would it include you going from your home-based office to a client's meeting? I think it does, but I want you to double check my thought on that. Okay. And as everybody knows, with CRA, you have to have a detailed log of all your kilometers used. There's something called Mile IQ. AI integrated, right? It gets in, you get in the car and your app pops up and it's going to ask you if you're traveling for business, yes or no, and it will track your kilometers for you and it will actually integrate with QuickBooks, right? So a lot of this stuff, we can now make sure that it's tech enabled to make sure that your world is a lot simpler.
Up to the sorry, maybe it's a step back. There's a question from Barb. Is it cost effective to hire a subcontractor?
Is it cost effective to hire
a subcontractor?
Well, can we cover that when we get to direct costs? Because oftentimes a subcontractor you need to hire in most cases, right? If you don't have that expertise, you're going to have to hire them, right? So I think if we've got that question right, I'll come back to that when we get to direct costs. So here in your sketchbook, again, the example, everything's going to be listed here for you. All you have to do is put a number attached to it. And if that's going to be a monthly expense and or if it's going to be annual or quarterly. So that's all you need to do there. Marketing and sales, you're going to have a better sense of what this is going to look like. But I want you to think about marketing and sales. Typically, there's 4 different categories with marketing and sales. There's all your general marketing costs. So I think somebody earlier on the call was talking about your general domains and emails. This is where I would budget for that as a marketing cost, right? Because our website is usually just that digital presence of what it is that we're doing. So website, domain, signage, business cards, marketing software. Remember that list I asked you to create on software? If you're ready to do it, I would take out the marketing software and budget for the marketing software specifically under marketing. Because again, why we're breaking these out is to make sure that we've got we want to make sure that we can measure the return on investment. So I want to take all of my marketing software because it ends up being quite expensive. And then I want to be able to take that and gauge that against the sales that we've had to look to see if I'm actually getting a healthy ROI on my marketing spend. Then there's all of your promotional initiatives, right? So your social media, your SEO, your SEM, your advertising, promotional material, trade show sponsorships, customer retention, meals and entertainment, very different from your training meals for your team and personnel. Those get taxed differently. So it's important for you to identify which of your meals are actually for promotional reasons and which of your meals are for team training. We're going to separate those two here. And then we have all of your consultants, right? So if you've got a social media consultant, right, we're going to budget for that here. If you've got an SEO consultant, you're going to budget for that here. So this is where all of the people that you are bringing in, not employees, but your consultants, we're going to budget for those marketing consultants under marketing and sales. And if you're a company that's heavily immersed in a lot of research and development, so if you're in deep tech, if you're in pharma, this is where you're going to put all of those additional expenses for your design, your research, your prototyping, your product testing and validation, your materials and supplies, intellectual property, right? Maybe under some of those lawyer fees. This is where you're going to put all of that under your marketing and sales. Okay. So again, in your sketchbook, you can come to this page. We're getting you to think about some of these expenses. There's the line items. I want you to put those dollars to those line items. If they don't apply to you, leave it, right? And then think about when is that money actually coming due. Abdallah, any questions on marketing and sales?
No, I just wanted to make, just to highlight the program that we have at Business Link. It's the digital marketing program, and that program is kind of, it helps just founders and business owners to budget for their advertising costs. So it gives you some insights into how to plan one for your online. It's specifically for online digital marketing. And so I would just encourage everyone to just, if they have the time to take advantage and benefit from that. I'm going to send the link for the program in the chat.
Fantastic.
So it helps you to kind of structure the budget for your digital marketing, advertising plan.
Fantastic.
A couple of questions. I'm incorporated, but the only one in my business. I use my car for mostly personal, but also for all my business needs. Do I have to use it a certain amount for the business?
Nope, you just, all you're going to do is you're just going to track how many kilometers do you drive on average per month for business purposes, and then multiply that by 72, and that's what you'll budget for. Right? Does that make sense? Yep, perfect. Okay, all right. Then other costs, just so you know, we're not going to talk about debt repayment today. We don't have the time, but you'll see here that in other costs, this is also where we do encourage you to budget for all of your what we call revolving debt. So any debt that you haven't been able to shake, debt like if you still have past due CEBA or triple RF, credit card debt that you haven't been able to shake for the business debt only, any past due CRA debt for the business that you haven't been able to shake. Again, Carol, David, Diana, and Abdallah at Business Link, they can walk you through the debt repayment calculator to show you how much money you need to budget for every month to get that debt wiped out in 36 months or less, right? So under other costs, we include that debt repayment, but this is also where you are going to budget for loan repayments. And so for those of you who are looking for a loan, right, I want you to stay to the very end because I'm going to show you exactly how to calculate that math. And for those of you that currently have loans, what we call fixed term or installment debt. So those are loans that have very fixed terms attached to it, right? You may have received it from BDC or one of our top 5 banks or AWE, and they are saying to you that every month you owe us this amount, and that's principal and interest. They are telling you what you owe them. So that is the number that you can budget for under your loan repayment under other costs. The other number I want you to think about here is what we call contingency funds. So contingency funds are how much money would you like to budget for every month? What I call your petty cash or your what if. What could go wrong in business? What could possibly happen? I want you to think about how much money do you want to have on hand in the event that something might happen. For some of you, it might be $50. For others of you, you might say, you know what, I want to budget an additional $1,000 every month to make sure that I've got some buffer and a little bit of breathing room there in your budget. That's what we call contingency funds. So that's the big number that I want you to think of for your down and dirty budget. But then I want you to reach out to the team at Business Link. If you've got that debt burden that you can't shake, I want you to be able to reach out to them because they'll help you with the calculator. You already have access to the calculator in the blueprint, but they can walk you through exactly how to get that calculator filled out. And that takes us through our indirect costs. So team and personnel, space and operating, your marketing and sales, and then your other costs. Let me just pause there. Any questions on those, Abdallah?
There's a question on does investing in small business count as a tax write-off?
Okay, I think we'll leave that one for now.
Yeah,
That's that's outside of our scope right now.
That's exactly outside of our scope, exactly.
Yeah,
I
yeah.
don't see any other questions.
Okay, all right. What do you think? Should we take a little break? Actually, I'm going to go to the chat. Let's go to the chat. Do you guys want a tiny little 3-minute break? Not long, but just to reset, or do you want to keep going? Let's rule of 3. Yes, a break. Yes, break. Okay. All right. 3 weighed in. Thank you for being here. We're going to take a little bit of a break. Let's try to get back at about 25, 26 after, and we're going to carry on with our Bermuda Triangle of budgets. Very important. So please come back to this. This is where all of you, I promise you, are losing profitability. So please, please, please come back. Okay. We'll see you in a couple minutes, everybody. Getting funded. I see you, Magda. All right. Hey, EJ, great to see you. Glad you're here.
Tony, I have a couple. Do you want to do a Q&A now, or would you want to leave that until the end?
Are we, oh, it's great to see Kathy here too. Are we okay if we just leave it to the
end?
to the end? Or when we get over to the Excel sheet? I think that will make more sense. We'll get through this Bermuda Triangle. It can be a bit sticky. And so once we get through the Bermuda Triangle, then we'll then we can certainly take some questions.
Fair enough.
Okay, thank you everybody for coming back so promptly. I hope everybody is hanging in there. Everybody feeling okay? Everybody feeling okay? Let me just get a pulse point here in the chat. Thumbs up or yes. EJ, I love it. All good. Clayton, all good. Info. Okay. Oh, good. I see yap. I wasn't sure if that was nap or yap, but I see yap. That's good. All right. Okay. So appreciate everybody hanging in there. It's such important stuff, and I'm glad it's easy to understand. Thank you, Pilar. I'm glad this is resonating with you. And I promise, if you just take one baby step after another, right, it becomes clearer and clearer and clearer. I know we're throwing a lot of information your way, but if you start the process and you use the tools and you've got Business Link there to support and catch you through perfecting it every step of the way, right, I promise you you'll get there. All right, so coming back to our second half, it's like we had a brief intermission, and now we are on the top part of our palette, which is revenue streams, direct costs, and price points. Believe it or not, revenue streams, when we have surveyed our founders that are building budgets, revenue streams came in as being the most complicated part of the entire budget. So I'm going to try to keep this as simple as possible for you. So revenue streams are what you sell in the business, right? It's how you make money. And so when you're asked, oh, well, what are your top revenue streams? We're asking you in the Cashflow Canvas to actually get very focused on what are the top 3 revenue streams that generate 80% or more of your company's income. And so sometimes that can be a little bit harder said than done. But I bet you right now, if you all were to have your microphones off and we were to say, list the top 3 revenue streams that generate 80% or more of your revenue, and you didn't overthink it, you would probably say A, B, and C, right? So here's what I want you to do. Here's how I want you to approach this exercise is I actually want you to, probably not in the workbook, on a separate sheet of paper, I want you to list all the ways that your business makes money. Right? So you may say hourly consulting, you may say this product, you might say that product, you might say that revenue stream, you might say, oh, it's the bundle of the haircut plus the blowout plus the product, right? I don't want you to overthink it. I just want you to write them all down. Not right now, because that might take some time, but I don't overthink it. Just write them all down. Use a whiteboard if you want. Then I want you to look through that list, and I want you to then circle what are the top 3 that you feel generate the most revenue for the company. Now, if you're a business that's already been in business for a while, you can definitely go to your bookkeeping software and you can pull a revenue report. But unfortunately, for many businesses, the revenue isn't broken down by revenue stream. It's usually all lumped together in one called sales, or there might be some distinction, but maybe not enough given where you're at in business now and all the different types of revenue that you offer. So rule number 1, go brainstorm all your revenue streams. Second step then is to highlight what your top 3 are going to be for the business. Now, the third step is I want you to think about there's a rule of thumb for these revenue streams, and that is that each one of the revenue streams that you are going to pick, it needs to have a price attached to it. So for example, if I'm a publisher, I might say, oh, advertising, that's a revenue stream. But can I put a price to advertising? No, I cannot, right? So this is where if I'm working with you, I would say, okay, well, what are your revenue streams then for advertising? Because advertising is what we call a profit center, right? But now I would say, oh, well, I have my full page ad, I have my full color, I have my full black and white, I have my quarter, I have my, and then they might list like 20 different sizes of ads that they have. And I'm going to say, what are your top three? Right? And they're going to say, oh, full page color, half page black and white, quarter page. They'll know, right? You will know what your top revenue generators are, but the rule of thumb is that you need to be able to have a price attached to it. It has to come with a price. So let me just pause there. Does that make sense for everybody? Any questions on that, Abdallah? I bet you there are.
Yeah. If you're a startup, how would you decide? Like, I know you said you can check your bookkeeping software if you've been in business, so it's you can kind of just think of what are the three major kind of revenue streams that you're making that make 80%. What if you're a startup? You're not so sure of what are your top three?
Yeah, so I want you to think then, that's a great question. If you're a startup, I want you to look at some of these other pieces here around what products and services are actually going to build the brand. What do you expect people to be coming to you for? What are your top passions, right? In pulling those things together, like why are people coming to you? What do you want to be known for? What is your brand all about? Right? We want to make sure that those are going to be the key drivers. And if you're not sure, pick the three that you want to start with, because you can always change your budget after, right? You can always say, oh, that revenue stream really didn't fly out the door, but this one did, right? So the key is here to get really focused. And it's not to say that you're not going to sell the other revenue streams. It's going to say that you're going to focus all of your energy into what you know those core drivers are going to be, right? So I'm going to show a couple of examples before we move on here, because I'm hoping that these will land for people, especially because it's been my experience with founders that you've either got everything lumped into one bucket called sales, or you've got 75 different revenue streams and you're trying to figure out how to focus in on these. So this is an example of an automotive company that had thousands of SKUs, right? And they're like, oh, how do I budget for thousands of SKUs? So in this example, and I know we're more than three here, but we got it pared down to 7. So now we've got their products, and then we have product category 1, category 2, category 3, right? Category 1, average transaction value, I'm just going to pick a number, 15,000. So in category 1, they might have some at 10, they might have some at 25, but their category 1, their average transaction value, average price point for category 1, 15,000. Average price point for category 2, 50,000. Average price point for category 3, 150,000, right? So instead of 80 SKUs, they now have 3 categories. Same thing for parts, category 1, 2, 3, average transaction value, right? And then service, labor, they had an hourly labor rate. In this particular company, they sold cars. Well, it wasn't cars, it was, what do they call those? Like ATVs and whatnot. And they also sold boats. So we ended up having 2 different structures here, one for labor on the ATVs and one for labor on marine, because that was double the price, right? So that's one example. Another example, a clothing boutique. So again, thousands of pieces of clothes, but they've got their core revenue streams. Casual tops, average transactional value. Casual bottoms, average transactional value. Career tops, ATV. Career bottoms, ATV. Outerwear, ATV. ATV, average transaction value, right? Another example, massage studio. 60-minute massage, 90-minute massage. They each come with different prices. They then have a monthly membership. So it's called the Massage Addict Monthly Membership, $190, right? With memberships, I'm going to encourage you, try to get away from unlimited. This includes unlimited massages, right? We want to try to like hone that in, and it includes 5 massages plus 1 product plus whatever that is. But we call it bundling, right? put that bundle together for that monthly membership, right? We see monthly memberships all the time with things like HelloFresh. That's a monthly membership. You're getting that package delivered weekly, right? There's terms attached to what that membership looks like. And in this case, they've got a product too, right? Which is their weighted blanket. Another example, a home builder, right? They say, oh yeah, all of our, we do homes. We do homes. It's all sales like that. That's what we do. But we sit down with them and we get them organized and they're like, okay, small renos, medium renos, large renos. And then we do home builds. We actually have medium-sized home builds and large-size home builds. They might go through this and realize that their sweet spots are actually the large renos and the large home build, right? So brainstorm your list first and then come up with what you think are those core revenue streams and make sure that there's an average transaction value or price beside it. Each one of these needs to have a price. Okay, hopefully those examples helped a little bit. Abdallah, what do we have on the question front?
There's one very specific to stock trading, I guess. But I'm assuming with stock trading, it's just, like buying and selling shares. And then
might be, so maybe just on that
Yeah.
front, if I can just maybe, I'm not exactly sure if you're fee-based, then if you're fee-based, that's easy to say, here's what your fee is, right? If it's commission-based, you might realize that you might have what we call small, medium, large clients and what that average commission is going to be. So this is, for example, if we're working with a realtor and they have a very specific commission structure, they might realize that in their market, they've got the small home, the medium home, the large home, the average transaction value for that home, and then what that commission would be on that home. So 15% of the average transaction value on a small home, right? Average transaction value on a medium, and then on a large. So I wouldn't get too particular on the details right now. Get your first draft done. And then once you get your first draft done, this again is where your coaches at Business Link can sit with you and actually walk you through getting very clear on your revenue streams, right? But get your first draft done. Show them that you've done your first draft. And then Abdallah, I know you'd love to do this. And Carol too, like I've seen her in action with this. This can be a frustrating exercise, but get your first draft done and then get the team at Business Link to walk you through, making sure that you're really honing in on what you know people are coming to you for. Go for it. Any other big questions there, Abdallah?
No, not for now. No.
Not for now? Okay. So once you get your core revenue streams, and this is why I'm going to ask you to start with, even when you start, like just pick one, right? We want you to end up with 3, but what's going to happen now is for each revenue stream that you conceptualize, that you come up with, you now have to do the direct cost exercise and the pricing exercise and the assumption exercise for each revenue stream. That's why we want to get you laser-like focused on what you know is going to move in your business, because now you've got this exercise to do for each revenue stream. So what we're going to move into now is the direct costs per revenue stream. So when you start this, I want you to take one revenue stream that you're fairly comfortable with. And now we're going to look at really zoning in on what the direct costs are for that revenue stream. So direct costs they're also known as AKA cost of goods sold, COGS, right? COGS, you've got right here, cost of sales, cost of services, variable expenses. So indirect costs are also known as fixed expenses. Direct costs are known as variable expenses here. And these are the costs that are now directly attached to selling that product and service. You would not have that cost if it wasn't for having to get that revenue stream out the door. So they are directly attached to it. So if I'm selling a glass of lemonade, my direct costs on the lemonade, obviously the lemons, the ice, the cup, the lid, the straw, the napkin, the merchant fee, right? All of those are what go in to selling that glass of lemonade. So that's what we're calculating here. Now, indirect costs, we've broken these down into direct costs A and direct cost B. We have two different categories of direct costs. So direct costs A, you can see here, we are including what we call materials, inputs, and subcontractors. Remember that term subcontractors? We talked about that last hour, right? We have employees, we have consultants. Consultants are the individuals that we hire to help us with business operations. But the subcontractors are the individuals that we recruit to help us deliver the product or service. And before I forget, I just want to mention we have to calculate our direct cost per revenue stream, because what we're looking to identify here is A, making sure that we can set a profitable price, and B, making sure that we don't lose that net profit then at the end of the day off of our net profitability. That's why we do this work. This is so important. I am going to mention this is not for the faint of heart. Like, I want you to go through this process, but again, I want you to reach out to Abdallah, David, Diana, Carol at Business Link, because they will help you with this. Once you get this work, this is a game changer for your business, and this is what will save you your profitability. So under material costs, and I'm going to show you an example here in a moment, but material costs are all the costs that are related to the material of selling that product or service. And this does also include services. So for example, it's raw materials, consumables, freight and landing costs, duty and exchange rates. So if I think about a product specifically, let's just say I go back to that automotive company, it's like all of the consumables, if they're doing like fixing the car, they might say, oh, I've got the engine, and then I've got all the oil and the paper towel and all these other little pieces that don't necessarily go with the engine, go with the car, but I need to use to get the engine in there. That's what we call consumables. Freight and landing costs. So if I'm selling apples and I say, oh, I've ordered apples and it's $1 an apple, I've ordered those online. A lot of people will say, oh, my material costs are $1 for the apple. I want you to actually go to the weigh bill, the actual invoice, because you might realize by the time duties and tariffs and storage costs, freight costs, by the time everything got added on there, that $1 that you thought you paid actually ended up being $1.25, right? If we do not catch that 25 cents, the only place that can come from is your net profitability, right? That's the only place. It's the only place that it can give. So we've got to make sure that we're accounting for those details here when we do our direct costs. Then the next category is input costs. These input costs, I have to be honest with you, these are the costs that most founders don't even think about, that you've never really done the math on these expenses. So input costs, this is not an exhaustive list by any means, but they include things like your merchant and transaction fees. So remember, all of you, when you take a credit card, whether it's through QuickBooks, Xero, Stripe, XB, Jane, they are all charging you to accept a credit card. And that is going to be in the form of a percent. So a percentage. So in QuickBooks right now, I think it's 2.9%. Stripe, I'm not sure what that number is anymore. Maybe it's 2.79%. You have to go and find out what is the percentage that they are charging you. With banks, again, you're going to get that huge statement every month, and it's probably going to be a couple of pages because they charge different percentages for different credit cards, right? They might charge 3.9% for an Amex and 2.7% for a Visa. I want you to budget on the high end, and I want you to go, okay, you know what, it's at its worst, I'm being charged 3.9% for taking an American Express. So I want you to go in, I want you to be safe, and I want you to budget for high. What you're going to do then, I'll come to that later in the example. So I want you to know what your percentage is. And then a transaction fee, almost inevitably, all of these organizations that are charging you a percentage to take a credit card are going to charge you a flat transaction fee just for the transaction itself. And it's going to be anywhere from 10 cents to probably 50 cents. It's probably going to be in around 30 cents per transaction. That is a direct cost, right? So we're going to add that. Then other expenses that you might want to think about, this goes back to Alexander, your point on the insurance waiver. So if you're going to spend that, I forget what that number was, right? That $2,000 a month on that project, if you're carrying that insurance and it's an annual project, right? It's going to take you a year to finish the project. How much are you going to be out of pocket for that insurance waiver? That is a direct cost. That's what you're going to make sure you've got that number in here. The other things are things like interest carrying costs. Interest carrying costs, again, if you are in construction, in whatever industry, but I use construction because typically you have to go out and you have to buy a whack load of materials for that project. It could be hundreds of thousands of dollars that you're actually buying in materials, right? Most of us, when we buy those materials, most of us are usually using a credit card or a line of credit. So I want you to calculate what are the interest carrying costs that you are absorbing to buy all of that material, because in construction specifically, you're probably not going to get paid, right, until the very end of the project. There is going to be 30%, 30%, 30%, and a 10% holdback. So I want you to calculate those interest carrying costs. Other examples of inputs include commission. So if you have commissioned sales associates, the commission goes here. Packaging goes here. Storage goes here. Spoilage and write-offs go here. Shipping and delivery outbound goes here. You can start to see now that these input costs are starting to add up, right? And we just always saw them as fixed expenses where they are not. They are directly attached to the product and service that we are selling. So I'm going to pause there because I bet you there's some questions.
We have one from David. I have 3 revenue streams, but the direct costs are related to each one. Do I divide the cost by 3?
Yes, I'm sorry. Great question. Yes, great question. Answer, no. Right. So what happens when we divide those revenues or those direct costs by 3 revenue streams, we're actually not getting an accurate picture of what the true costs are for each revenue stream. So when I go back to that example of the home builder, right, on the rental projects, medium, small, and large, their direct costs on a build, on a new build, are actually much higher, even as a percentage, than those on a renovation. Right? So we need to do this exercise specifically, David, for each revenue stream. And I know it's going to sound daunting because you're like, oh, that's kind of painful. But again, you've got a team at Business Link that can walk you through this process. But I promise you, you can come and find me and I will I'll find a way to pay you back if you do not find lost profitability in doing this exercise. Every single founder we work with has realized, oh my gosh, I'm not charging enough, right? So please do it per revenue stream.
We have
okay.
Aaron asking as well, what about materials being used if they're to be used for an undetermined period of time before being retired? How do you estimate for that?
Okay, materials being used. Well, the materials, they're going with the actual revenue stream, right? Like they're attached to it. I'm assuming that maybe we're talking about equipment costs that we're using for an indeterminate amount of time, so still owned by the business, but being used for a specific project.
That's probably my understanding as well,
okay.
Unless Aaron wants to unmute and clarify his question.
Okay, perfect. No. No. Okay. All right. Well, I'll hang around at the end. And that does go into a layer of granularity. We actually have a calculator where you can put in all of your equipment and it will start to assess what is the value of that equipment on an hourly basis, a half day, a day. And then we can actually start to include that into our pricing strategy, or sorry, into our direct costs assessment here. Okay, so we've got materials, we've got inputs. I want to show you an example, but before I do, we have subcontractors. So subcontractors, again, these are the people that we recruit for a specific project, right? So that they can help deliver that end project. So again, if I'm the home builder, I now have a roofer, I've got a framer, I've got the millwork people, right? They're doing all of that work. They are actually going to give me an estimate. And you want to make sure that that estimate is very clear, that it includes any per diems, it includes travel, it includes all the materials, that they've got their own insurance, right? That final price that you're looking at, that is all in, right? The other thing that's really important here, and because most of you are in Alberta, so vast majority of you, this isn't necessarily going to resonate, but if you are getting charged provincial taxes on any of these costs, we need to make sure that we are including those in our direct costs, not GST, but provincial taxes, yes, because we do not get those back, right? So that is an expense that you are out of pocket that we need to make sure is getting accounted for here. So I just want to show you an example of a apple pie. I'm keeping this really, really simple here, but I want you to see how this adds up. So in your sketchbook, here's what you're going to do. You're going to come, you're going to write down the revenue stream, and then you're going to write down what is the current asking price of that particular revenue stream, your current asking price. You're going to write that down. Then you're going to go through, and yours is going to look a little different now because we've revised it a bit, but you're going to write down all of your material costs. So in this example, I've got a pie box. My cost per pie box, $125. I need 100 of those. Now it's $125. $125 is my cost. Ingredients, I haven't gone through and broken these all out here, but especially in the food industry, oftentimes I will just put a caveat in here. In specific industries, a lot of industries will use software-specific apps that will help to dial in on direct costs. So in the food industry, there's multiple apps out there that will allow you to put in all of your ingredients, your recipe. It will calculate the direct cost for you along with nutritional value. We see this in trades quite a bit too. There's software that has been created that's industry specific to help you with your direct costs in each one of these industries. So here we've got ingredients. My total ingredients come out to $1,525 for this particular revenue stream of an apple pie party. My plates and napkins, right, $250. You can see that number. Uniforms that I have to rent for this particular party. I can now see that my total material costs come out to $1,975. My inputs in this case, keeping it simple, I have a merchant fee. Merchant fee is 2.79. So all I've done is 2,500 times 2.79%, right? Oh, and I didn't put this in here. Sorry, I took it out because in this particular case, they're paying me by check, right? So they're not paying by credit card. But the math would be 2,500 times 2.79% times 2.79%. Equals, it would be $69.75. You can see how this adds up, right? That's 69 that I might not have budgeted for. That's coming right off of my profitability. My transaction fee, $1.50, because my bank is going to charge me to receive those funds. And then my kilometers. Sorry, this was a couple of years ago. So here it's 68 cents. You can now budget 72 cents per kilometer that you're using for this particular revenue stream. So I'm coming out to $15.10 for inputs. Then I'm going to come over to my subcontractors, and my subcontractors, I can now see that I have my baker, my catering crew, 1, 2, and 3. So these are all subcontractors. These are not employees of the company. I am hiring them specifically for this project. I'm adding up the rate is 6% per PST on this. And so now I can see that my total rate for my subcontractors is $519. So when I add up my materials, my inputs and subs, I've got $1,095, $1,510 in inputs, $519 in subcontractor costs. My total, sorry, hard to see, but my total direct costs A come out to $2,509.50. I have been charging $2,500. Just put in the chat what you're seeing there. What's your reaction to that math? Ouch, loss. Yeah, one more, loss. Absolutely. Most of you, when you do this, you're going to go, you're probably going to just realize, I've been barely breaking even based on what I'm doing here. Alexander, the red face, the scowl. Yeah, but you know what? You guys on this call, you actually have the courage to see this math, right? Not everyone has the courage to see this math, but you guys do. And that's why I'm so honored that you're here doing this math. Because if you do this math and you encourage others to do this math, this is the math that's going to keep more small business owners in business, right? This is the math that needs to be done. So that's direct cost A.
So Tanya,
Yeah.
would your recommendation or suggestion be, like, if I'm pricing for any product or service, is to start from the ground up, is to identify the direct costs first and then decide what margins I'm happy to, bring into the business and then price accordingly, versus pricing and then breaking down the costs and then realizing that you're not making ends meet?
Yeah, and this is why I love when you build a budget altogether, because they all, as you can see, these building blocks all have a ripple effect on the bottom line. Like, one doesn't solve the problem, right? You get clear on revenue streams, the direct cost per revenue stream. We're about to move into pricing. So I love that when you get all of the numbers together and then you look at your budget and your cash flow and you go, okay, this can actually work. Right? This can work. You're going to see, if you just hang in, everybody on the call, for another 45 minutes, even less than that, another 20 minutes, I'm going to show you, once you rough out these numbers and we bring them then over to Excel, it's going to show you if your numbers work or not. And if they don't work, then I'm going to show you what to do to tweak it. Right? So, but I love that you brought that up, Abdallah, because as we're going through this, I don't want you to lock in on these numbers to say definitively, this is where we're at, especially when it comes to pricing, because you have to get it into the Excel document to see if it's all going to work, right? So, okay, so direct cost B. Direct cost B, this is the labor that your employees do. So now, not subcontractors, this is the work that you and your team members are doing, the tasks that you're doing to sell this product or service, right? So here's how we need to do it. The first thing that I'm going to want you to do is, you're going to see this in the sketchbook. And before I move there, I need to say this because this is very important. You are only doing direct cost B to inform the price. That's the only reason why you're going to do this math. You're actually not going to use this number in your Excel sheet, but you are doing this math because you want to make sure that you have the right price. So here's what you're going to do. You're going to come to your sketchbook, and the very first thing you're going to do is you're going to start listing all the tasks associated with selling that particular revenue stream, whether it's a product or a service. Right? So in this particular example of the catering event, I go, and sometimes it helps to think of it like a virtual experience, and you put yourself in the seat of the client. And you're like, okay, so the client calls and they ask about information. And then that's my booking call. And I'm giving them more information and walking them through what the package is going to look like so I won't get to that yet. So you go through all of the tasks. So I have a booking call, then I do a site visit, then I do a menu proposal, then I do a contract, then I do a booking of the baker, and then I book the crew, and then I order the rentals, and then I set the client up in my CRM system, and then I invoice them, and then I prep the order, and then I do a team menu, and then I have my travel time, and then I have my post-event site visit. You can see it's not as easy as, I just do my catering event, right? Like, I promise you, especially for services, it's going to be line by line by line by line by line. Right? When you're project-based and trades, it's line by line by line. Like, here's all the things that go into selling this product and or service. So I want you to think about all of the tasks associated with doing that. Then the next thing I'm going to ask you to do is how much time is required. So I want you to think in increments of 5 minutes. Is it 5, 10, 15, 20, 25, 30, right? Like half an hour. And you'll see in the academy, I'm going to come back here because now we have to translate time into decimal hours, right? So if we think an hour, we're thinking, okay, 60 minutes actually equals 1 hour. If we're thinking 10 minutes divided by 60 equals 0.17 of an hour, right? So I need you to now turn your time into decimal hours, and it's just whatever that time is divided by 60 minutes in an hour will give you the number that you need to make sure that you can get this math done. So you're going to list your time required in decimal hours right here. So we've got that. Then we are going to list the rate. So this is very important. This is how much money is the business out of pocket to perform the task. So just to be clear, this isn't the rate that you charge the client. This is the rate that the business has to budget for because the business knows that they have to pay. For example, this booking call, this is being done by someone who's at $23 per hour. So let's just say this is the admin assistant. They're doing the booking call. This is $23 an hour plus the source deductions at 14.6%, right? So with the hourly rate plus the source deductions, that is the rate. So this is where I get a lot of questions on this. And that is that the founder usually says, well, I don't have an admin assistant. I'm doing everything. So this is not the rate of, you do not put your rate in for everything if you're doing everything. You need to think about who is the right person to do that job, even though you don't have that person right now, because you want to be building this from a place of integrity where you would be able to show the client, listen, we've got an admin assistant that's doing admin work and the management work is billed out at it's the budget. The business has to budget that rate for the management work. So you can see in here, we have 3 tiers of personnel. We have admin, we have management, we have mid-level management doing the work that needs to be done. So it's going to require you to think very differently about your business, that you are not the sole proprietor and the janitor and the bookkeeper and the salesperson. It's going to force you to think about the roles and the right rate for that role. And this is the rate that the business is out of pocket, not the billing rate to the client. Can I just get a thumbs up that that landed with everybody? You get that. Right person, right rate, right role. Yes. Thumbs up, thumbs up. Okay, awesome. And in case you forget this, I'm giving you so much information right now, but in case you forget it, please remember that Business Link has the coaches there to support you through this. And just this one piece, if that's all you need. But here's the moment where most of you are going to fall off your chair when you do this work. So now that I know my labor costs, I add up all my labor costs, I end up with labor costs of $322. I add that to my inputs, materials, and subs. So my inputs, material, and subs were $2,509. I now add my labor costs of $322. And now I realize, oh, shucks, you might use stronger words. I am out of pocket $2,832.02 to sell this event to this client, right? And this is where most founders sit at the end of this exercise. They realize that they have not been charging enough, and in most cases, they have been paying the client to do business with them, right? This is why we do direct costs per revenue stream, because now you're going to have a goal. So even when it's project-based and you're doing a different estimate for each project, you're going to get really clear on what you want that margin to look like, right? Anticipated costs. And then if your costs end up being higher for a project, you know that you're going to have to put the price up, right? So that you stay on track with where you want your direct cost to be. Because if you end up being the founder that is so oh, I'm going to say it just for what it is. You're so desperate for work that you say, okay, I'm going to come in and you know what, I'll sell this to you for $2,500. You've got to realize that you're paying the client now that $332. You're actually making that choice. And these numbers, again, do not include your indirect costs, right? This is just bare breaking even, or your bare bones on your direct costs only. So please promise me that you're going to do this math. Let me come to the chat. Everybody promise me you're going to do the math. Okay, I'm seeing lots of emojis. I love the emojis. Pinky promise. I love it. I love it. I love it. Okay, amazing. I am so glad. Like, if anything, this is what I want you to realize. Like, this is where you're going to find your gold in your budget. So important. Okay. So let me make this, how do I make this smaller? Come on, speak to me, come to me. All right, I'm trying to make this smaller. Hang in there, everybody. Why is this not? There we go. Okay. So once we get through direct costs, right, and we see those numbers, most of you, you might want to vomit when you see those numbers. You might go, ah, and then a lot of founders, when they finish that, they're like, oh my goodness, I have to increase my prices. And then you go, how is that going to be possible? People are barely, okay, paying what I'm already charging. And like, who's going to want to pay more, right? I don't know about you. If you've looked around, everybody has increased their prices. If you have not increased your prices in the last year, you absolutely better do it. And also, every year, at the very least, you should be increasing your prices just by the bare inflation rate. Right? So whatever that inflation rate is, I think it's gone down to 2 something now, but you should be increasing your prices regularly. I don't know how many of you have had the opportunity to, well, I'm sure a lot of you had, but to go to Tim's and get coffee. Have you noticed that, and they've been pretty static for a while, but their coffee will increase regularly, right? And it actually went down the other day, but it's because they know their direct costs, right? 171, 187, 189, 180. They're changing by little pennies, right? Incremental amounts, because they know their inputs are changing. They are so dialed in on their direct costs that their prices change accordingly. So to do the pricing process, the weighted pricing process, you absolutely need to know what your costs are. So when it comes to pricing, there's a couple of different strategies for pricing that pricing experts will talk about. There's one called cost plus, which is where you take that cost of that item and then you assign a markup value to it, right? Oftentimes in retail, we see that. But again, remember, it's not just the cost of the product. There's the cost of your packaging, right? There's all those other hidden costs attached to it and your merchant fee that get bundled into your product costs. So in pricing, we've got what we call cost plus pricing. And then we have something called competition. I think this is what we were looking at exploring a little bit earlier this morning. So competition is where we price based on what the competition is pricing at, and then we set our price on that because we think, oh, well, if the competition is charging that and they're getting business, that's what I'm going to set my price on. But again, remember that we've got over 80% of business owners are going down. And it's usually because they have not done the direct costs and they haven't priced their products appropriately. So it's never made sense to me that we base our price based on competition. I think it's perpetuating the issue, right? But we are going to look at competition in this model, but we're not going to base our price solely on what the competition is doing. So we're doing a hybrid of cost, competition, and what we call value, the value add. What is the value that your product or service delivers in the market? And I have to say, this exercise is probably one of the most, it's the most fun that you're probably going to have in the Cashflow Canvas. And I would strongly encourage you to reach out to one of the coaches at Business Link, because especially when we start looking at value, you want that sounding board in this exercise. It's going to be such a phenomenal experience for you. It's so much fun. So here's what you're going to do. We're not going to do it today because obviously you need the time to be able to do this properly. But here's what you do. So step 1, in your sketchbook, this you will probably already know because you've already done this research, because you've likely already priced your product or service based on what the competition is doing. But your very first step is to, again, write up here what your revenue stream is, because we're doing this per revenue stream. And then you're going to list the current asking price, and we won't know suggested price. So it's in red because you're going to be able to do that after. So the very first thing you're going to do is you're going to write out your competition. So who are you in competition with for that specific product or service? You might realize that you have global competition, local competition. You might realize that you have indirect competition, right? So I want you to get really focused on what you think the top, I think we give you space for 4 to 6 competitors. So you're going to write those competitors down. And then you're going to go over here on the far right, and you're going to write down the price that is being charged. So what is the competitor charging that product or service for? What is that revenue stream actually being charged at from the competitor's perspective? Then if you have time, and I think this is a very valuable exercise, I want you to write down what are the strengths and weaknesses of that competitor's product. And why that's important for you is when you do this exercise, it's likely that you're going to be going website after website after website after website. And what you're going to realize is that I bet you a lot of these websites look very familiar. They look very similar. They might even be using the same colors and the same fonts and the same type of stock imagery. And you might even realize that they're all saying the same thing: top quality, best price, good for your budget, right? Always on time. You're going to realize after this exercise, I bet you, that everyone's saying the same thing. And this is going to be the experience that your customers are having as well. They're doing their research saying, oh, well, everything looks pretty much the same, right? So that's the first step of the weighted pricing process. So competitor, price, and then the strengths and weaknesses of that particular product and or service. I'm going to pause there. Abdallah, any questions coming up on competitive analysis?
There's one from Connie. What if I'm a first mover?
First move, so I'm assuming like trailblazer and first to market is what I'm
first to market, meaning no competitors. So new idea, new concept, niche market.
Okay, so then I'm going to ask you to challenge yourself on that, because I bet you have indirect competition. So in from the perspective of the client, when you're new to market, what would be their options? What are they already using then? Right? Because there's probably something that they're using that isn't quite like yours, right, in your industry, but something that's similar. I can think of, for example, with Nail the Numbers, with the Cashflow Canvas. Is there a system out there that helps a business owner build a business budget like this? No. But is there QuickBooks? Yeah, you can go to QuickBooks and you can say, build me a budget, and it'll say, okay, well, I want to add 10% onto my revenue from last year, right? It won't give you a strategy, but it will give you a budget. So that would be my indirect competition, right, for Cashflow Canvas. Another indirect competitor for Cashflow Canvas would be Profit First. So a whole system that makes sure that you want to profit, but what makes us different is that we get you to know your percentages, not just picking arbitrary percentages. So I bet you've got indirect competition out there. It's who's what am I trying to say? The wallet that you're looking to tap into, they have choices with respect to where they can spend their money, right? So we just have to drill down a little bit more and figure out what that indirect competition is going to look like. Okay.
And Tanya, if you're not able to get that information like competitive pricing, and let's say you're a service-based company doing consulting work, would you just rely on the value you're delivering to clients as kind of a starting point when you're pricing?
Oh, yeah, that's a great question. So 2 tips on that is, one, I would encourage you to reach out to, well, 3 tips. One, you can reach out to BusinessLink, because BusinessLink has I'm going to say survey information, right? You can go with your questions and they can be able to give you reports based on that market research. The other thing you can do is you can select a comparable market. So for example, if I'm in Banff and I am a trades individual, I may call up another trade company in Whistler. So not my direct competition, but similar markets, similar challenges, and ask them what they're doing. You'd be amazed at how many founders actually have had great success with that. strategy. The other option is reach out to your local associations. So you've got industry associations that are going to know a lot of these numbers, right? Reach out to them and ask them what they're seeing with respect to some of these rates. And I guess fourth idea, AI, right? Go to AI and put it in there and see what it comes up with. Make sure to cite the sources, right? And then validate the sources that it's giving you. So lots of ways to do this now. Okay, does that help, Abdallah?
Yeah, I've shared the link for the market research service, a
Awesome.
business link, and it's a free service. Yeah, it's secondary market research. It's on industry trends, and and also competitive analysis. So we have what we call a directory listing. We can give you a list of like competitive information on through Hovers and the Dun & Bradstreet. So it basically lists all the competitors. Let's say you're opening a restaurant in Edmonton, so it can give you a list of. We can provide you with a list of up to 100. So that includes contact details, website information, and even a sales estimate. It's an estimate of, like how much these businesses are generating. So that can give you kind of some heads up on the size of the opportunity and the business itself. So I've shared the link in the chat for that.
Abdallah, that's huge. Thank you. That is so valuable, everyone. Such a great resource. Thank you to BusinessLink for doing that. Okay. So then here's where it gets a little trickier. And here's where, again, I'd encourage you to reach out to BusinessLink to get a coach to support you through this. Sorry for the pixelation, but here we go. So the next part of this is where we have to start, we need to get a better understanding of what is the decision-making criteria that the customer is using to decide whether or not to buy your particular revenue stream. So by that, I mean, in their head, you have to get into their head. What are they starting to assess? What is most important to them? And they, in many cases, will not be having this conversation with you. They might not even know that it's just subconscious, right? They're not going to come to you with a list and can you check these things off for me? So you have to do this work on their behalf. So in this particular example of a basket of apples, I'm thinking, okay, my target audience, I know my target audience, they value that the product is locally sourced. So all you have to do for the first go is you just need to write what is most important. And sometimes, if you're doing this with a coach, I want you to just brainstorm again. Like, don't do it in your workbook, just brainstorm the list of all the things that are most important to the client, right? So in this case now, I've ended up with locally sourced, natural, free of pesticides. Packaging is actually important, freshness, flavor, and accessibility. These are what are going to be my 6 core decision-making criteria. For some of you, it might be expertise. It might be reputation. You might find as you go through that some of them are kind of bundled together, like expertise and reputation. They would probably be one and the same when you start going through this. So this is why working with a coach is so valuable for you in this particular exercise. So you're going to list your criteria. Forget all these other 3 proof points here. First thing is just list the criteria. Then, again, why I want you to work with a coach is I want you to score each piece of criteria. So we're scoring on a scale of 1 to 5. 1 is weak, 5 is strong. And this score now is based on what you know to be true about your product or service. So if I'm asking the founder, in this case, locally sourced. So founder, I'm going to say Abdallah, in this case, you're selling our basket of apples. I say to Abdallah, okay, on a scale of 1 to 5, 1 being weak, 5 being strong, no room for improvement. What would you score your basket of apples when it comes to being locally sourced? And Abdallah says to me, a 4, we're solid 4, right? Solid 4. So then I say to Abdallah, and again, this is why I want you to use a coach. I say to Abdallah, solid 4, that's a really high score, right? I love it, but Abdallah, now I want you to defend it. Like, that's a huge score to give yourself. Like, what makes you so good, right? And this is kind of the language we've coached our coaches on, because what happens is when we present it this way, you get a little defensive, to be honest with you, right? You're like, I'm a 4. I know exactly why I'm a 4. And in that defensive-ness, you spew gold. You actually start to say, I'm a 4 because our orchard is only 30K out of town. We're a 3-generational farm. All of our packaging is locally sourced. Like, you start to go off on defending your score. And in that rant, you have actually started to articulate the proof points that we should be communicating with the client. This is what they want to hear. This is what is defending your price. This is the goal. So for each one of these pieces of criteria, you're going to score it, and then you're going to provide 3 proof points that defend your score. Why are you the score you're at? And again, you're going to score subjectively, I know, but I want you to be honest. So for example, in this case, accessibility, I only gave myself a 1.5 because I'm saying, you know what, we're not super accessible. We're a seasonal stall on weekends only. And sure, yep, we've got free parking. So we get some points for free parking. But everything else, we're hard to get to and we're not around all the time, right? So I'm being honest with the score. So out of this, I want you to just note on these proof points, the more that you can make these quantifiable, you'll notice that the orchard, 30K out of town, not just an orchard out of town, a 3-generational farm, 32% of nutritional value is retained, tree to table in less than 4 days. The more you can assign numbers to your proof points, the stronger your proof points become. The less the less your clients start thinking, oh yeah, I'm not sure, orchard out of town. But when you say it's 30K out of town, when you say it's a 3-generational farm, right, it strengthens your value proposition. Okay, so last piece here now, once you get your score, you're going to add them all up and you're going to divide it by the number of criteria that you've used. So in this case, 22 divided by 6 now equals 3.6. So by the time you finish this step, you're going to end up with a score that's going to have a decimal in it. And in this case, I'm a 3.6. Then the last piece that your coaches can help you with is down here. We want to figure out, what does a 3.6 equal on our weighted pricing scale? So based on what's happening in the market, the lowest price to the highest price, where does a 3.6 land? And so what we're going to do is we're going to take the lowest price being charged, which is $20, and the highest price being charged, which is $50. We have to do some manual math, and we have built a calculator for it, and I'll get you that information later. But I want you to do the manual math so that you understand this. To get your number 3, you have to take 20 and 50, divide it by 2, so we get our average, our 35. And we're going to do the same thing for the 4. And I know I'm going through this quickly, but your coaches can help you. But the end result is that we're going to know that a 3.6 on the scale of what our competitors are doing, $20 to $50, we now know that we are able to, but not able, we should actually be pricing out this product or service at $39. Do you remember up here? We were pricing it out at 30, and now we know we should be 39 based on competition and the value of the product that we are offering. I have a question for you. If you have a client right now, let's say that you're selling this basket of apples, and the client comes along and they say, oh, $39 for a basket of apples. That's way too expensive. I'm not paying $39 for the basket of apples. What is that telling you about the client? Put it into the chat. Any guesses? Any guesses? Not your client. Absolutely. That's exactly it. They are not your client, right? They are not your ideal audience. It's because they don't value something on your value metrics here, which just says if they don't value it, that's not your ideal client. This is when you say, dear client, I know you have many choices. I know you can go and find a basket of apples for $20 over here and $50 over here. We're 39 primarily because we're not super accessible, right? But if that doesn't fit for you, there are other options for you. And then you can let them know what those other options are, right? This work, what you get out of this is not only can you now identify your price, but you can defend your price, and you have all of these proof points, which not only defend the price, but quite honestly, these should all be your marketing messages. These should be the messages that are front and center on your landing page for that product and service, that you're communicating these regularly through social media, because this is what is most important to your target audience, and they're not asking you these questions. So you need to clarify these messages for your target audience. And that, my friends, is the weighted pricing process. So I hope that lands for everybody. I hope you found value in that, because that is a game changer. And again, your coaches at Business Link are there to support you through that. If you just want to do that exercise, you can absolutely reach out and do that exercise with Business Link. They're there for you on that. Okay, last piece, and I'm going to make this really short, and then we're diving into Excel, is just assumptions. So in your workbook with assumptions, assumptions are understanding how many units are you going to sell, when are you going to sell them based on seasonality, and when are you going to receive the revenue. So in your workbook, you are going to see this page. There's 3 pages because, right, for each revenue stream, you have to do this exercise. So that's why we give you 3 worksheets for each one of these exercises. So in this case, again, you're going to write down the revenue stream. You're going to write down the seasonality. So I want you to think about, when is this product or service most likely to sell? And then I want you to put estimated units sold. So if you've been in business for a while, hopefully you can go back to your bookkeeping software and look to see what were the trends for this particular revenue stream. What months were they high? What months were they low? Right? And what were the units sold? And do you want to give them a little lift? Yes or no? Right? But you get to put that all together. If you are new to business, you're going to have to make some assumptions at this point. You're going to have to do some guesses, and then we're going to bring it over to the Excel, and we're going to the Excel sheet, the forecast, and we're going to see if your guesses are going to work out or not. But we're going to get to that here in a second. And then we've got to talk about payment schedules. So payment schedules are understanding when you are actually going to get the money into the bank account. So is this, in this particular example, selling a basket of apples, this is going to be cash or credit received at point of sale, right? It's easy. But if you're a service, what you might be doing is you might be invoicing the client, and then they might have 30, 60, 90 days. In Alberta, for oil and gas businesses, right, in that industry, they're notorious for 120 days. So if you invoice in January, we actually have to start showing the revenue coming in April, right? So we wouldn't show when it's invoiced, we'd actually show that the revenue is coming in April. You might have a reoccurring flat fee. So if you're doing a monthly membership, that would be something that we're going to start to see in the Excel sheet. So you write that out here. And or if there's a payment schedule. So if you have a payment schedule, I'm going to keep it simple in the cash flow, and we're just going to do deposit and balance. If you've got anything more than that, like if you are in trades and you're doing 30%, 30%, 30%, and a 10% holdback, you're going to have to work with your coaches on figuring out that payment schedule and then getting that into your cash flow. And we're always able to assist with that too on the back end. So that's what assumptions are. So in your workbook, you're going to see that there's a page for assumptions for each one of your revenue streams. And that gets us through getting our sketchbook done. And what I'm going to encourage you to do before you move into Excel is actually just get really clear with your numbers and download the palette and the color key. And now take your numbers out of the sketchbook and actually just put them in here, because it'll be really easy to put them into Excel after. So you put basket of apples. I now know my direct cost A. So this is why it's in 2 categories. My materials, my inputs and subs were $18.31. And my labor costs for putting that basket of apples together, $5.50. Same thing with my basket of apples for wholesale. My costs remain the same, but I'm splitting them out. And then my apple of my eye catering event, I've got my direct costs, and then I've got just my labor costs separated, my A's and my B's. So as you can see, this is now running horizontally, right? Basket of apples, direct costs, the price that I should be charging based on my weighted pricing process, and now my sales assumptions. Basket of apples wholesale, right? Same cost, different price, and then some different assumptions with respect to when they're going to sell. My Apple event, costs, price point, and sales assumptions. Okay, and then loading the palette, you can put these costs down here if you wish. But what's really important is up here, making sure that you've got each revenue stream clearly articulated with the direct cost and the price point and the assumption attached to it. Okay, I don't think we have time for a break. I'm sorry, everybody, but we are going to move into the forecast. So when we move into the forecast, this is where you are going to download your, and I'm going to go through these slides here in a moment. You are going to download your, it's called your Cashflow Canvas. It is an Excel document. When you download it, if you download it into Google Drive, just so you know, all of the password protection comes off. So you need to be careful because it might mess up your formulas if you put numbers into the wrong places. One thing to note here is you can see up at the top, I'm opening up a blank sheet. You can see up at the top, these months are now month 1 to month 12. The first thing I'm going to get you to do is to change your month based on your year, right? Your fiscal year. So if you're running January to December, put that in. If you're an incorporated company and you run a different year, you're going to put in those months as they pertain to what your fiscal looks like. So that's easy. You put that up there. The next thing that I want you to know is that in this sheet, all of the yellow or all of the color-coded areas, those are the areas that you put your numbers into. You do not put anything into the gray or the white areas. There's formulas attached to all of that. So your color-coded areas only is where you're going to input data. Do you remember, it might feel like a lifetime ago now, but do you remember when I was showing you just a basic cash flow, right? And how that gets structured? The exact same thing is true here. So I just want to show you that just as an example, if I put in revenue or if I put in apples here, I put in apples, did you see that then right away, and I'm going to make this bigger so you can see, if I put in apples in the pale shaded area, right away that translates, it's carrying through down to pricing, and then it's carrying through down to direct costs. So you only have to put in that data up here. Now, if I say my price per apple is, I'm going to put $1.50 just to be easy. $1.50, that's still not giving me any revenue over here. And that's because under assumptions, this is where you're going to put how many units sold, right, of that particular revenue stream. Not in this order, right? I'm just showing you how these cells work. So for example, if I sell 100 apples, and I'm going to put in here month of January, if I sell 100 apples in January times 150 per apple, I now have revenue of $150 coming in for January. Then as I scroll down and I put in my direct costs, only A, not my labor, so only A, I put in my direct costs and I say that this is not the right math, but I put in $1.25, right? That now is saying that of all of my revenue that came in for apples, if my direct costs were $1.25 per apple, that would mean $125 does not belong to me. That belongs to my inventory account so I can replenish my apples, leaving me with a gross profit of $25. And then from that $25, now I need to subtract all of my indirect costs, right? So just as an example, if I put my general manager in here, And I said my general manager salary was 5,000, just as an example. Now I can see at the end of the month, my net profitability is going to be minus $4,975, right, in the red. So if you see red numbers pop up, that means negative. Black numbers are positive. So here's what I want you to do. When you come to this, now that you've seen how this works, the first thing you're going to do is you're going to come up to the top and you are going to adjust your months as required. So in this example, I'm adjusting my months as required. I'm putting January, February, March, April, May, June, July, and then carrying those over. In case you didn't see that, all I did is I came to January, I went to the bottom right-hand square and I dragged across and it automatically adjusted my months for me. Then the next thing you are going to do is you are going to come down to, you're going to forget your revenue streams and your prices and your direct costs, and you're going to come down here to your indirect costs. And you are going to, line by line, input all of your employees first. So as an example, I'm going to do general manager and admin, assistant, and I'm just going to put in a rough number right now. So you're going to put in all of your employees and you're going to put in the monthly rate that you've budgeted for. This is why if you spend 80% of your time in your sketchbook, everything else here will be super easy. These do not include payroll deductions. So this is just the compensation that you've negotiated with that individual. And I'm going to show you again, drag and drop. So if I want to carry these over through the other cells, I'm going to highlight both cells. And then I'm going to go to the bottom right-hand corner and I get the little plus sign and I'm going to drag those across. So it's going to automatically fill in my spreadsheet for me. So now I can see at the end of the year, I've got $60,000 for my general manager and I've got $30,000 for my part-time admin person. I'm going to put that in there. Can I get some thumbs up in the chat? 3 thumbs up to make sure everybody gets that. Well, I guess the second step. First step is months. Second step, put in your employees. Awesome. Okay. Third, this is I'm going to say as confusing as it gets, but everyone's going to have a different experience. Now I want you to put in payroll deductions. So do you remember payroll deductions? All I asked, not payroll, but payroll. All I asked is that you remembered your percentage, right? And so in Alberta, we're starting with 14.6%, right? I know you're all going to go back and check out your WCB rates, and that's going to have an impact on this, but 14.6% is all we need right now. So 14.6%. So you might want to rewatch the video on this when it comes to this hack if you're not totally familiar with spreadsheets. But you're going to come to your January cell and you're going to highlight it. Sorry, I'm just going to move this out of the way so I can show you. So you're going to come to the cell, highlight it. Then you're going to go auto sum. So you're going to get your formula up here. And what you're going to see in your formula box now is that it's taking my employees, so in this case, D46 to D47. So all of that is being recognized here. And then I'm going to multiply it by. So asterisk, a little star, multiplied by, and I'm going to go 14.6%. That's it, right? So there's your formula. So all of your employees multiplied by 14.6%. And now I'm going to hit enter. And now that is calculating the payroll deductions for you. And why I love doing it that way is because now when I carry that formula across, right, now it's auto-populated for the year. But if I decide over here that I want to make this admin assistant full-time, and now they're going to be 5,000, right, it's going to just automatically adjust the payroll deduction for you. It's just going to save you a lot of headache going forward if you have to make adjustments on your team and personnel costs, your employee costs. Okay, everybody good? So what you're going to do now, very easy. Now you're just going to go line by line and you're going to carry all the other costs over. So you're going to put in your organizational culture, right? You're going to put in your benefits. You're going to put in your bonuses. You get the idea. So you just go line by line and you transfer the numbers over. And you're going to do that for team and personnel, space and operating, marketing and sales, and other costs. Super easy. Everybody get that? Let me just see a thumbs up if that's landing with everyone. 3 thumbs. I can't tell if these are old thumbs or new thumbs. Yep, okay, it's good. If you have more lines to add, I'm going to ask that you might reach out to a coach, or, for example, sometimes in space and operating, we see them listing every piece of software. Do that in your book, right? And have one line for software. And if you want, you can go, for example, if I put software in here, then I might go in here and I might, sorry, I have to enter. Then I might go in and put in a new comment. And in that comment, here's where I'm going to say, oh, this includes QuickBooks, right? This includes HubSpot. So you can put the comments in here, but you can start to shorten your line items by just having the major category, and then use comments to put in the details if you want. That tends to be a good hack for people. Okay, so once you have that in, then the next thing you're going to do is you're going to come up here to your revenue streams. And now you're going to add your top 3. So apples, I might do basket of apples here. Oops. Basket of apples and catering event. So you're going to put in your top 3 revenue streams. Then you're going to put in the price that you're charging for each. So you just come in over here, you go basket of apples. Now, the price that you're charging, this is important. You might not yet be comfortable charging the price that the weighted pricing process has told you you need to charge, right? You may say, oh, you know what? I'm more comfortable, not ready to go all the way yet, right? Like I've been charging 34, so I'm going to stick at 34 for now. So I want you to put the price that you actually intend to charge this product or service out at, right? So you're going to put those prices in, and then you're going to put the direct cost in here per revenue stream. So I'm going to come to the chat because I want to ask you, when you put your direct costs in, are you going to use direct cost A, direct cost B, or direct costs A and B? I love it. One more. Okay. All right. I'm glad I asked. So the answer is A, right? Can somebody put in the chat why we are not using B? I know, Alexander. I know. This is why I asked the question. Why are we only using A and not B? B is for pricing only, exactly. And where have we already budgeted for our employees that are doing the tasks? Where are those numbers already? Yes, team costs, that's right. So all of those employees that were doing those tasks, we've already budgeted for them here, right? So if we did A and B, we would be doubling up. You'd be great. You'd be making so much money because you will have doubled up on these costs, right? But we're only putting in A. So A only, A only. So we want to make sure then that you put in your direct costs for A only. And then I love it, Alexander. I love the emojis, making my day. So once you have that in, then you are going to come over to your assumptions. And your assumptions, again, I'm just going to carry over the 100 for now, but then I know that I'm going to be selling a lot more apples in June and July. So that might be 500 there, 500 here. August might ramp up to 700 and then back down in September. For all of you that are doing this, especially to get access to funding, your assumptions, lenders do not want to see 100 across the board because they know that you all have seasonality. And for us, that's a sign right away that you haven't done the work, right? So it's like, right? Like we want to see that you've done the seasonality. The other thing we do not want to see is 100, 200, 300, 400, 500. 600, you get the idea, right? That hockey curve growth, because we know that that is never going to happen. That is not how businesses fly. It's not how they work. So please stay away from that. So to start off with, you're just going to put your base assumptions. So that's all you're going to do. Step 1, do your month. Step 2, put in all of your indirect costs. Step 3, put in your revenue streams, then your prices, then your direct costs, and then your assumptions. This actually, believe it or not, is going to go very quickly for you because you've already done the heavy lifting in your sketchbook. So now, just like a cooking class, let's imagine, right, that we've baked our budget and we've got all of our numbers in. So now I've got my apples, my revenue streams. You can see I've put some assumptions in here. I've got my prices, right? They've changed a little bit because I've actually put in my actual prices and my actual direct costs. So do you remember, before I give it away, when you do your first draft of your budget, what is the first objective in our first draft? Do you remember we talked about it at the very beginning? Very beginning. Anyone remember what the first objective is? Get it done. Yes, get it done. Get your first draft done. Absolutely. Clarity. Sorry, the truck is going by. Hopefully you can't hear that. Brain dump. Absolutely. Okay. All right. Profitability. Kareen, yes. So, or not Kareen, sorry, Connie, you're absolutely right. Mark, absolutely right. So now what we want to do is, once you get all of your numbers in, you are going to scroll to the bottom. And, oh, sorry, wrong one. I'm coming to this example. Same thing, wrong one. Okay. So now you're going to scroll to the bottom, and maybe not, you might see a sea of red, right? So in this case, I'm scrolling to the bottom, and I can see here that my net profitability, there are months where I'm in the negative, which is okay. There's months where I'm in the positive. That's great. But at the very end of the year, I am negative $14,785. Not going to fly. You're not going to be able to secure the working capital you need based on negative $14,785. So there's 4 things that we can do to increase the profitability of our budget. Can anybody guess what those 4 things are? Throw it in the chat. It doesn't necessarily mean that the pricing is wrong. Reduce expenses, yes. Increase pricing, reduce expenses. Add more value, potentially. That's a really good point. If you need to increase your price even more, you might need to go back to your weighted pricing process and strengthen those areas that were weak. Find another revenue stream. I see where you're going with that. I'm going to encourage you not to do that right off the top, because what this is saying, based on your existing revenue streams, your financial model isn't working. So I would not add another revenue stream at this point, because if you add one revenue stream that is profitable, then it's basically you've got 3 suckers that are going to take all the life out of that one revenue stream. So you want to make this work before you add additional revenue streams on. So here are the 4 things you can do, and I'm going to suggest you do them in this order. So the first thing to do is to look to see, can you increase your units sold? Now, I don't want you to start fudging the numbers just to make the numbers look good, because ultimately you are building a budget for you, right? And I want you to make sure that these numbers are adding up for you. But for example, and I just want to keep our eye on our net profitability right now. So we're negative $14,785. So if I looked at my numbers and I go, you know what, I'm saying I can sell 8 catering events, I'm pretty sure I can do 9. And I decide that I'm going to sell 1 more catering event, and I put 9 in here. I want you to see that it's the small changes that have a big impact. So now I went from negative 14,000 to negative 12. So the first thing you're going to do is adjust, sorry, whoops, I don't mean to make you seasick here, is adjust units sold. The second thing you're going to do is you can come over here, and you guys already said it, is adjust your price, right? So I now know that I can charge, that I should be charging based on value. I should be charging this out at $39. So I'm going to say I'm not quite comfortable going there yet, but what if I did 36 for retail and I did 34.50, whoops, 34.50 for wholesale? What impact would that have on my profitability? So now I'm going to go up and over and up. And look at that. I went from -12 to now positive 6%. Sorry, 6,000, not percent. It's these little changes that you make to your budget that will have a really big impact, right? So step 1 is to adjust your units sold. Step 2 is to adjust your price. Step 3, maybe if you can you shave off like 10 or 20 cents from any of your direct costs? You're going to have to get on the phone with the supplier, see what they can do. But step 4 is to adjust your direct costs if you can. And then step 5 would be, if you're still not profitable, this now is where you start to scale your costs. So for example, the general manager, we had budgeted the fair market rate, right? Like what was out there in the market. And I'm already profitable, but I'm just showing this to you as an example. This might be now where I say, bare bones, I need to make $4,000 a month. So I'm going to try that for the first quarter. So my rule of thumb here is, if you are starting to adjust your indirect costs, only do it a quarter at a time, because I want you to be able to see how you can start to scale your business to get from where you are to where you need to be. Right? So as an example here, my virtual assistant, I'm going to say, okay, I'm not going to have one in the first 6 months. I'm going to take that person out for now, right? And you can see what happened to my payroll deductions. So when you're decreasing your indirect costs, go a quarter only, right? And typically the only places that we can make adjustment are usually marketing, debt repayment, and unfortunately, our salaries. So we can see now in this example, our net profit at the end of the year is 18,000 plus, right? So I've got a net profit that is still in the negative some months. Again, that's A-okay. I'm profitable some months, but at the end of the year, first objective met, 18,000 is our net profit at the end. We're making money. This idea is financially viable. We are good. Does anybody remember what the second objective of our cash flow is? First is profitability, your profit. And what is the second objective? Throw it in there. Anybody remember? So profitability equals sustainability. Demi, yep. Be there for the long-term sustainability, absolutely. Your profitability, because you're going to bank that 18,000 into your retained earnings. We're not going to spend it. That included you getting paid. The second objective is to make sure that your bank account is balanced. So this speaks to Mark's comment here on investment. So now this is the last step, everybody. And I know we're going through this quickly, but again, remember there's the video recap, and this is broken down for you step by step in the course, with the spreadsheets, with the workbooks, with the discussion button, with the community. So we're here for you. We've got you. And Business Link is there. They've got their coaches. But now I want you to come down here to your closing cash balance. What does a sea of red mean again? What do red numbers mean in your budget, in your cash flow? Loss, yeah, and negative, absolutely. So this now is saying that your bank account is in the negative. For all of you looking for money now, this is really important. So now this is showing you that your bank account is in the negative. And I can see here that at its worst, my bank account is negative $13,000, right? So in January, it's -4. In February, it's -8 because I had a negative net profit that month. Right? So now I have to add the negative net profit to my negative balance. That's why I'm -8. In March, same thing. I started with -8, but now I turned a little bit of a profit, 376. So now my bank account, we're coming out of the hole, right? You get how the numbers are coming together. So now I have a couple of options. I can either go back and look at my indirect cost and see if there's anything else I can scale down on. But again, remember, lenders do not want to see that you are not taking anything out of the business, because if you aren't making any money, you can't survive. And if you can't survive, the business can't survive. So it's not about turning that down to zero. You might come over here and say, okay, my marketing budget, sorry, that jumped on me. My marketing budget, again, I'm not super fond of cutting your marketing budget because you'll probably need it to generate sales, but maybe you decide that you're going to scale to 750. Sorry, you're going to start at 750 and then scale up to 1,000. This isn't about fudging the numbers so that your bank account ends up black. This is about understanding what are the expenses that you need to budget for. And now at this point, the very last step is that this now identifies our working capital requirements. How much money you need to ask for your operating budget. Not your startup costs per se, because BusinessLink can help you with that list of startup costs. This is to make sure that your bank account, once you open your doors, that your bank account will always have enough money in it. So I'm going to ask you, if you were lenders and you saw this bank account of your founders, how much money would you ask your founder to ask for? What do you think your founder should be asking for in this particular example? Any guesses? Nobody's venturing a guess. Oh, 20, thank you. We've got some numbers. Okay. So I like the 20,000, and this is why. Because you can see, yes, you can see here that at its worst, the bank account is negative $12,566. We have to make sure that, first of all, the plan never really goes according to plan. So we need to make sure that we're adding a buffer on that. And then I would ask you if we have time, but I don't. So I'm going to give you the answer. The other expense that we need to budget for now is the interest on the loan that you're going to ask for. So let's say that I'm going to ask for $20,000. What I'm going to do here is under other income, I'm now going to show I need a loan of $20,000. In this first month, I need $20,000 to come in. $20,000 is in my bank account. I can breathe easy. There's all, my bank account is in the black. The bank account has to be in the black every month. Absolutely. Net profit, no, but bank account, yes. And then I would ask you, what do we need to budget for now? And you would all tell me we have to budget for the loan repayment. So now I'm going to put loan repayment, loan number 2. And what you can do is that whoever you are getting a loan from, they're going to tell you their terms. There's a calculator that I can show you at another time, but basically you can go to BDC loan repayment calculator and it will show you, and actually maybe I'll just do that right now so you can see this all together. BDC loan repayment. And it doesn't need to be a BDC loan for you to use the calculator. I just want to show you how it works. And just grant me an extra 2 minutes, everybody, sorry. So I'm going to put in $20,000. Annual interest rate, they're going to tell you what that interest rate is. I'm going to use 8 in this case. And length of your loan, typically it can be over a 5-month period for most cases, so 60 months. And then you just calculate. And then it's going to show you, right, what your payment's going to be, what your total payments are, and the total interest paid. I now know that I want to take this 405 over, and now I'm going to come over here and I'm going to put in loan repayment number 2, and I'm going to put in 405. And I am now going to carry that over. And now, my friends, you have a budget that A, shows that you're profitable. And if you are a startup, you might need to do 2 years. And actually, your lenders are probably going to ask for 2 to 3 years. If you're a startup, you might not be profitable in the first year, and that's okay. But definitely by the end of the second year, unless you're into deep tech or pharma, we want to make sure that your business has that profitability. We now have a balanced bank account that is in the black, and we have shown the working capital requirements along with the loan repayment. So all of that is here. That I just, oh, you guys are amazing for sticking this out. This is how you build the cash flow. Take your time, do it in the workbook, right? Make sure that you've got the workbook going for you. All of your work is in there. Then you bring it over into your Excel sheet and make sure that first and foremost it's profitable. And then second of all, that we want to make sure that that bank account is always balanced. And I want to make sure again to remind you that you've got the team at Business Link. You have got Abdallah and Diana and Carol and David that are there to support you through this entire process. And if you will grant me, I'm going to come to one last screen here, and I will stay and take as many questions as you have. But I want to remind you, do you remember we called this the yellow brick road of budgets? It's to the bank and beyond. And why I love it when you do this work, you can tell that we infuse a lot of Ozardry in here. And this is because if you recall, the moral of the story of the Wizard of Oz is that Dorothy had the power all along. And this is why I love it when you do a budget, because you all have the power to profit. You all have it, but you have to plan intentionally for that profit, because that profit then is going to increase the value of your asset, and it is what is going to ensure your sustainability. And I want to leave you with this thought. I am on a mission, for those of you who know me, and I know there's a couple of you on the call, I'm on a mission to flip the switch on this narrative about being small in business and that profit is a bad thing. We live in a society where this label of small has kept us small. It has kept us paying ourselves a small wage, charging a small price, and generating a small net profit, right? Budget for that profitability. And I want you to realize how powerful you are. So get these numbers. If each one of you on this call, and every business owner in Canada, this is why we're on this mission, if each one of you were to generate just $41,000 in net profit, $41,000 in net profit, the taxable amount on that over 5 years would wipe out our country's entire deficit. Just think about that for a moment. If you were to generate $41,000, our entire deficit for Canada would be wiped out, and you would have almost $250,000, $250,000 in retained earnings. And imagine that in an investment that's paying off at 15%. I'm sharing that with you because I want you to know that you are more powerful than I believe you think you are right now. And once you build that budget, you are powerful beyond belief. So I want to thank you for being here, for holding the line for this long, 3 frigging hours of numbers. All of this information is available to you. I can't thank Business Link enough. Business Link was actually the very first organization to come on board and get certified. We've grown now to 93 coaches. We're going to be 330 by the end of the year. We have 271 organizations supporting you in building your budget. So please, 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 again, budget the time, reach out to your Business Link coaches. They're going to get you through this. And if you would be so kind, I would love it if you could leave a Google review. Let us know what this meant to you and what you took away from this process. It's great for other people to see this, and I love to see it as well. I love to know what this has meant for you as you've gone through this process.
Thank you
I'm going to
so
stop
much,
there.
Tanya.
Yeah.
Thank you so much. It's been an amazing workshop, and as always, there's never enough time with your workshops. So thank you so much, and thanks to everyone for spending your morning with us. So thank you so much. I hope everyone has benefited from this workshop. And just to recap, the headlines are: we're doing the financial planning, we're doing the cash flow for profitability, we're doing it for positive cash flow, and we're doing it for making sure that our bank accounts are balanced. I know there are a couple of questions. We obviously don't have the time for those, but what I would encourage everyone, are you able to take a couple of questions, Tanya?
I would absolutely, I absolutely can, Linda, as long as you're okay with timing and this isn't going to time out on us and we're okay. But I want to make sure all the questions are answered. Yeah.
For
Fair
sure.
enough.
So
Okay.
Della, what we can do is I can stay on and take over, and then I can stay on with Tanya for as long as she wants to. We're recording this session, so everyone will have access just via the link. So stay tuned for the email that will be going out. It will not be made available publicly, but it will be made available via the link. So yes, we can stay over, I would say 30-40 minutes, if that works for you.
Yeah, I believe so. I'm just double checking my schedule. I have
Your schedule.
a history for getting so excited about this stuff, and then I'm like, oh, yes, I'm great. I'm good. Yeah, you bet.
Perfect. And there'll be a short survey and feedback sent out after the webinar. So please fill it in. It will help us just improve the future boot camps as well. So thank you all. Have a great one.
Thanks, Abdallah.
Thanks.
Sophie, I love your comment. This webinar is going to turn my business and household budget around. Thank you. Oh, you're welcome, Sophie. Thank you for spending, these 3 hours with us to build your budget. You're doing the work, so thank you for doing it.
Definitely. Perfect. So we do have quite a few questions here in the Q&A. If you had questions throughout the session and you missed the chance to, well, now it's your opportunity to do so. So let's see those questions in the Q&A feature, because if you put them in the chat, we might miss them. So
Do you want me to read them out? A couple of them?
We have.
I can read some of them, Linda, if you like. Yeah. Okay. So we have one from John. Your stats team seem to indicate that salaries in larger companies and government jobs far exceed small businesses and SME, have a lot of extra costs. Help. Did I miss something?
Well, I think again, so I think the important thing to do is to go to ChatGPT, fair market rate, right, for this sort of industry in a business this size. So the prompt is there. So we want to make sure. So for example, we want to make sure that when you're doing the research, you don't say, what is the fair market rate for a CEO, right, in a trade company, because you're likely to get $237,000 per year plus $2 million in bonuses, which obviously make it a little bit prohibitive to make your budget work. So you're really looking to see what those fair market rates are. So we're looking for that middle line, not the fair market rate for a large enterprise, right, and what they're paying out for employees, but what that role is for a business that is the similar size to what it is that your business is at.
There's one on YouTube and Spotify. So I'm assuming like it's if you're using YouTube and Spotify as like basically channels for your business. So can I use these for learning my craft?
No, I think they mean if they can use them as like tax write-offs, the apps that they use to learn their crafts and whatnot. For example, YouTube and Spotify, it's something they can write off in their taxes.
Yeah, I think again, I would probably defer to your bookkeeper on that. I think every industry is going to be a little bit different. I do write off Spotify because we use music in all of our boot camps, right? So it's one of those expenses that is legitimate, right? Where we can show that we've been using that in our business. Not entirely sure about YouTube, but I would reach out to your bookkeeper, given your industry and given your nature of work, right? What can you actually budget for? There's some industries where they get to budget off their haircuts and expense out their haircuts and their dry cleaning. And but it really does depend on the industry that you're in, and making sure that you're getting solid financial advice from your bookkeeper and accountant, right, to make sure that you're getting that information that's validated.
Hey, I'm a former government employee. How can I shift my mindset from being a professional to being business oriented?
So government I mean, again,
yeah, he's starting a business, I think, for the first time, maybe.
Yeah, I think I'm biased on this one. I think the numbers are typically where it all starts, right? To understand what it's going to take to become financially viable. I think that then you start with the numbers and then you build a business plan around it. I think right away when you do your numbers, that's gonna shake you out of that. I don't want to say complacency, but when you're an employee, you don't always recognize, oh my goodness, it costs the organization $27 an hour just to have my bum in the seat, right? Based on the computer that I'm using and the software that I'm using, right? Above and beyond any sort of hourly wages. So the numbers are usually a great wake-up call, and will probably shift you out of that, that employee slumber of I don't want to say taking for granted, but I think I probably speak on behalf of a lot of the business owners out there that, we started our business and then we get a lot of employees go, well, how hard could it be to actually do what you do? And I'm not making enough. And you actually go through the numbers with them and they start to realize, oh my goodness, there's a lot more to this than I originally thought. And I'm going to address this one if it's okay. Sophie asked this great question around how often do we review it? So review the cash flow. And so I want to remind everybody that when you build your plan, that is actually your first step, because now you have to implement your plan, right? You've got to implement it, you've got to measure it, and then you've got to consistently modify it. So short answer, Sophie, is that once you build your plan, I would definitely start measuring it every month, right? Start to track what you're doing against your plan every month. And then what we do is we modify the plan quarterly. So then every quarter, after we've got 3 months of numbers behind us, depending on where we sit, now it's time to go in and should we double check our direct costs? Absolutely. Did things go up in our direct costs, right? Because this is now time to adjust the price. So we go in and we modify quarterly. So going in, making the assessment, doing the changes that need to happen. And I will say when it comes to pricing, don't forget that you should have a pricing communication strategy. You should be letting your customers know that you're about to increase prices, why you're going to increase them, and at what point that increase is going to take effect. We should always be communicating that pricing strategy with our customers.
So always revisit your plan, I guess.
Always, yeah, like every quarter for sure. And I know somewhere here in this chat, there was a question around, can we integrate this plan with QuickBooks, right? So yeah. I will say we've got some really exciting news next year where we're going to make that seamless. But in the meantime, what happens is that once you've got this plan done, you might realize that you might need to, we call it calibrate your bookkeeping software, right? So that your numbers are lining up in the right places, that your merchant fees are in direct costs, right? And that your team of personnel is in the right space, right? In your indirect costs. Now that you've got it organized, you can work with your bookkeeper to actually get your books organized so that your plan and your books are speaking the same language. And then you can upload your plan into QuickBooks with the enterprise account version. So you need to have the enterprise account version with QuickBooks, and then you can measure your plan really easily in QuickBooks. You don't need to pull a report and then go to an Excel document. You'll be able to upload your plan, but you need to make sure that your books are calibrated, that they're organized the same way that your plan is now organized.
How about for seasonal businesses? Paint nights is a business. Paint nights being September to December, painting more in the summer. So it's a seasonal business. So I guess the question is, when we are defining the regime areas of focus, do we split focus seasonally in my case?
I think they mean revenue.
Yeah.
So when we're defining the revenue areas of focus, do they split the focus seasonally?
Yeah. So you want to make sure, again, that you are being objective with your seasonality. So if you've got if you do paint nights and you know that they're going to be busy around certain times, maybe Valentine's, Mother's Day, summer, right? Then your assumptions, your revenue should show that seasonality, right? We should see that there's more revenue coming in on those months. And why that's important is because you want to make sure that you always have enough money in your bank account. So on those months where the revenue is not going to come in, right? You want to make sure that you have a plan for addressing that before you find yourself in a pinch, before you feel stuck. So don't fudge the numbers so that the bank account always looks good. Make sure that you're putting them in there so that you can proactively plan. But I will say here too, sometimes, like I'll just use the example of a landscaping company where if they've got revenues that are like in their seasonality, they're super busy over the summer months, and then there's nothing usually over the winter months. They have a couple of options. Either they have to make sure that their sales are so strong in the summer months that it's going to carry them through for the rest of the year, right? Like retail, that's where Black Friday comes from. Like the sales are so strong in that Black Friday that typically that revenue will carry them for the rest of the year. Or the other option is to introduce a second revenue stream that might be complementary that will carry you in the shoulder or the down season. So in a landscaping company, maybe they move to snow removal, right? In
I
the
see.
winter, or they might do raking or gutter cleaning in the fall, right? So they've come up with revenue streams that start to complement what they're doing so that they get consistency with that revenue.
Okay. How do you calculate spoilage and write-offs as an input?
Whoa, that's great. Great question. So spoilage and write-offs, typically, we see that a lot in hospitality and restaurants, right? Where you get a red pepper, but you're typically writing like 10% of that off because you're chopping up the top or something falls on the floor. So usually it is just a percentage, and you're probably safe with 10% to start. Right? So 10% of whatever that product item is, you can budget that in for extra spoilage or write-off or theft. But it might be something that you want to start tracking down the road, right? So that you can get accuracy with that number as you start to move through it. But just picking a number to start with and then tracking it as you go along.
Perfect. How about materials like massage linens? I'm assuming that's a massage service that have a shelf life.
Great point. So, I mean, when we're working with a massage company, those would be examples of consumables, right? So you can dial down on the math if you want, but with a massage company, right away, some of the consumables would be the oil. The other consumable with the massage company would be all the cleaning, right? So understanding what does a load of laundry actually cost you and how many towels are you getting out of that means, cost per use. So you can budget for that. And then if you want to do the math, you can absolutely budget on, what are the materials that are being used? What is the lifespan of that specific towel? And how many uses do you anticipate getting out of that? If you want to get into that granularity, I would not suggest starting there, right? Laundry is where I would suggest, oil is where I would suggest, but material usage per massage, that's probably going to take you a rabbit hole that will prevent you from finishing your cash flow, and it'll keep you stuck. But circle back on it at the end if you wish to.
Okay. For the cash flow, is the cash flow template intended for predicting and planning future revenue, or only for calculating the current state of affairs?
Oh, the whole idea is the idea is for future, right? Not necessarily for current, because as you know, we want to start budgeting now for those fair market rates. We want you to see like what people do I need in my budget. But that's where, again, at the end of it, if you're not making profitability, go back and say, okay, I'm just going to take this rate for now, and I don't need these people for now. Right now, you can play with it and you can start to eliminate some of those costs that I had asked you to consider, but it'll show you at what point you can start introducing them into your budget. So it was designed to be future based. It was designed for you to build a plan that shows you how to achieve profitability.
Perfect. And it's, as you said, like when we started the webinar, few folks were out looking for financial resources, and they're looking for a loan. So it's kind of a future forecast for the lender to see the viability of the business, right? And to assess that.
Yeah,
okay.
Yeah. Can I address one of Sophie's questions here too? She's got another great question here that we didn't get to cover. So Sophie's asking about how does she, I guess kind of two here, but how does she budget for future inventory costs? So one of the key things here, Sophie, is when we think back to that cash flow, and maybe can I still share a screen? I can, because I think this will be easier to explain here. So now that you have your budget, this is one of the things that I'm going to encourage all of you to start adopting as a healthy habit. So when you see your direct costs here, these direct costs, for some of you, these are primarily going to be inventory costs, right? So if I look at my apples here and my direct cost, I can see in this January, my direct costs come out as $5,154. What I would love for all of you to start doing is taking this direct cost and actually setting it aside in a separate bank account, right? so that and it's not always going to line up, because I know these expenses don't necessarily happen on this month, but these direct costs come back to your plan and say, based on these sales coming in, right, our direct costs are this, and you start to set that aside. And it is from that account that you start to purchase your inventory. Does that make sense? I might just show this too, because I think.
So having Tanya like a separate bank account for your direct cost. This way you're, yeah. So you can make sure that you've accounted for everything and.
Exactly.
Mm-hmm.
Exactly. So what we advocate for is 4 bank accounts. I know it's a lot, but remember, these 3 bank accounts are going to be low fee, if not no fee bank accounts. And therefore, we call them holding accounts, right? So you have your operating account. This is where all of your money currently comes in. So all of your revenue comes in, and then all of your indirect costs. So your team and personnel and your rent, your space and operating, all of them will come out of your typical operating account. But at the end of the month, what we encourage you to do now is to take out your direct costs and get them aside. If that expense isn't being incurred that month, get the direct cost out of the bank account, because it's not your money to play with, right? So we get it out of the bank account, and that's where you'll be able to find that money for inventory costs. We definitely, right off the top, right, we're going to encourage you to set aside all of the taxes. So if we go back here and we look at our revenue coming in, right, 10,850, this was without GST. So you at the end of the month won't have 10,850. You're likely to have 16,000 and whatever that is, that extra 5%. Sorry, so I add the 5 on there, that extra 5%. So what I'm suggesting is that when your revenue comes in, take off the GST right off the top and get it into that savings account. Because again, CRA is going to come knocking for it. And I know that they're going to take off what you've spent in GST, but that's going to be a pleasant bonus at the end. So get your taxes set aside, get your deferred costs, including your direct costs, set aside. And every month, at the end of the month, whatever your net profit is, right? If I go back here as an example, and let's just pretend these are actual numbers and not forecasted, and I'm sitting with a net profit here of 8,859, I would encourage you to then take off taxes. So if you're a sole prop, you take off 30%. If you're an incorporation, take off 20%. Put that in your tax account, and then take the balance and put that into your net profit account, right? Your net profit is your savings account. This way, at the end of the year, instead of waiting for the accountant to show you how profitable you are, you will have all of your money in the right buckets. You'll be able to track where your money is actually going, and it won't be lost in paperwork. You'll know where your money is. Sorry, that was definitely a rabbit hole, Sophie, but I hope that helped.
It's a great take on point. Okay, where do you account for equipment use? I.e., I have a large format printer to make part of my product. Over time, I need to buy a new one. So where do I account for usage of the product? And is that a direct cost?
I love that. So the simple answer with that is, where I would start is I would start by understanding what we call your depreciation expense every year, right? So an accountant will take a big asset like that and they'll write off a portion of its value every year, because that's a tax write-off. So what I would do is I would say to the accountant, okay, well, I would ask them, I say, okay, how much are you depreciating this by? And they're going to say, let's just say it's a $500,000 piece of equipment, and I'm just going to use rough math. And they're going to say, well, we're depreciating it by $100,000 each year. What I would do then is I would take that $100,000, I would divide it by 12, and that gives me 8,333. And then what I would do is right off the top here under other costs, and I love that you asked it because we didn't really dig down on this today. Depreciation. I would put depreciation, and now I would budget for 8,333 every month. What's going to happen here now is, with that amount, I know that I now have $99,000 that every month I'm going to take that 833 And I am now going to put it into my deferred cost here because it includes depreciation. And now I know what I'm doing is I'm actually budgeting to replace that piece of equipment after its useful life is done and over. So that
It's more of
don't,
a contingency fund as well, Tanya, like for
well, I
when you're
would budget,
replacing the printer in the future.
yeah, I would budget for it above and beyond contingency. I would just say, just like the same way right now, if I know I need to purchase a new car in 5 years, instead of using a line of credit or using, their financing, I would just say, you know what, I'm going to set aside whatever it is, $700 a month so that I can buy a new car when I need to do it. Right. So that's all we're doing here is we're budgeting for the depreciation, but we're going to set it into this fund so that we know we have the funds set aside when we need to repurchase that piece of equipment. The second piece of that question, and it does get down into granularity, and again, the coaches at Business Link can support you through this, but there's a calculator that when you start to understand your running costs on that piece of equipment, including warranties and maintenance, you can actually start to understand what the hourly cost is. So then you can infuse it into your direct cost. Because if you know a project is going to take, 12 hours above and beyond the ink that's needed for that piece of equipment, that will help you to inform what that price needs to be. So again, a layer of complexity. I wouldn't recommend it at the very beginning when you're building a budget, but definitely a place that you can get to.
Question around the, just identifying only the top 3 revenue streams. Where do you account for the rest of the revenue to see how it balances out?
Yeah, so then another great question. So then what you can do here, sorry, I've got to share my screen again. So what we do with our founders, just to make it easy, is again, you can see here that you have 10 spots for revenue. So I asked you to get really focused on your top 3, but you do have additional line items here. You can either add the other revenue streams in as line items, right? But remember, then you want to do your direct costs for them as well too. Or your other option is to come down here under revenue stream number 10 and just put in other, right? And find your average transaction value. In this case, let's just say it's $100. And then your average direct costs on that, let's just say it's 50% at $50, right? That's one of your options in here. But again, why we want you to focus on your core revenue streams is to make sure that you've built a plan now that even without the other revenue streams, that your plan is solid, right? On your core revenue streams, you know that you're going to be profitable. Everything else is just gravy, as long as it's what we call not a loss leader, as long as it's not a revenue stream that's going to suck your profitability out because you're losing money on the pricing and the direct costs. So we've given you room for 10. If you still need room, I would just start pulling together those different profit centers and then just put other here. Profit center 1, 2, 3, whatever that might look like.
Is there a point in exploring the possibility of using QuickBooks, given that we have those sheets?
Yeah, and I think we kind of touched on that earlier. Yeah. So what I don't like about QuickBooks is, or any AI right now. So QuickBooks, as you all probably might have heard, they're coming out with AI in November, and they're going to have a financial agent that will help you with the forecasting. What it is not doing, what AI will not do, it does not do it. And I've learned a whole bunch about AI, and it's called oh gosh, now I forget. Agentic. Anyways, I'm butchering it. You can see why I'm not an AI expert, but it doesn't allow to solve for the complexities, right? So anything that you've got in QuickBooks, direct costs are probably going to be a schmozzle in QuickBooks. So you got to get out of QuickBooks to really figure out your direct costs, right? You've got to get out of QuickBooks to figure out your pricing. Once you figure out each one of these building blocks, then you can go back in and you can start to adjust your QuickBooks as you now understand your numbers to truly be. And then you can leverage AI. Then you can say, okay, now I want a predictive model, right? Based on me knowing that all of my inputs are solid. But AI won't help you with the inputs, right? Other than the little pieces that we've talked about in terms of, using some of these prompts to understand it, but it doesn't solve the complexity of the model. We've got to do that work ourselves, which is why we're so excited with the Cashflow Canvas, because it's people powered. It gives you a really solid understanding, which then you can leverage AI for. Don't do this with AI all on its own. You're probably to get some very inaccurate information that will compromise what you're doing with the business.
Thanks. Okay, another question is looking for suggestion for food ingredients tracking that you mentioned that can link to QuickBooks. I own a food truck and this would be super helpful.
Yes, great question. And unfortunately, I forget all of the names of the software. But if you email me, I will put my email here in the chat. Tanya@nailthenumbers.com. I will get you a list. I know we've seen 3 different pieces of software. It's just hard to keep track of all the different software that's used for different industries, but there's amazing software in the food industry because, again, you can put in all of your ingredients, you put in all of your recipes, it will spit out, you can put in all of your labor, and it will spit out what those direct costs are for each one of your recipes. And then it will also spit out your nutritional label, right? Like there's so much there's so much value to these direct cost apps that are coming out now. So I will, I'll find that information for you and send that over if you send me an email.
Perfect. Regarding another question is regarding the competitive analysis, would the research be a more accurate, I guess, tool if I check pricing with franchises?
Could. I think it depends on the nature of the business. I would definitely, you could use AI. Franchises, it does amaze me. You'd think that sometimes these franchisors, right, would have all of their numbers together and have it figured out.
You mean the franchisors, right? The main ones,
not the franchisee goes in and they expect that they're buying into a system that is well executed, right, and that they know all of the numbers. We've worked with numerous franchisors that do not understand how all the numbers come together to ensure profitability for their franchisees. So I don't know. I think it would depend. There's definitely Tim's definitely knows their numbers inside and out. Subway definitely knows their numbers inside and out. There's some other ones that I know I would definitely trust. But yeah, it would depend on the franchise that you're reaching out to, because quite a few of them, they do not understand the financial model.
Gotcha. In the Excel spreadsheet, if I incorporate it in June, is that when I start my month? Like, is that the starting
so that's
month for that sheet?
Exactly. That's what we call a fiscal, right? And so if you want to get a sense of what your year would look like, I definitely encourage you to start June and then end, May, right? That would end May 31st. So you start June, you'd end in May. But I also want to encourage you that maybe when you're just playing with this, right, you might just start, what would a cash flow look like starting next month, right? Like just play with it first and foremost. But if you are going to a lender, the lender would want to see that your cash flow is based on your fiscal, right? Or if you're a sole proprietor, based on a calendar. And then obviously you'd have a couple of months where, like if you're starting now, you'd have, October, November, December. So you'd show the last 3 months of 1 year, and then you'd show your full fiscal or calendar year in a separate sheet. You can all have them together, but you'd say 2025 will look like this, 2026 will look like this, and 2027 will look like this.
Thank you. How often do you suggest we review our numbers, especially in terms of raising prices?
Yeah, so I'll go back to my standard. Review your numbers every month for sure, right? Absolutely. Really dialed in. They're doing it every week, right? To tap into it. With respect to making adjustments, just do that quarterly. Right? Like, because otherwise you're always going to be chasing. You're going to be like, this month didn't work. What do I, and then you're going to try to change everything. So I just we advocate for making the changes quarterly and not monthly. So reviewing monthly, but making changes quarterly.
Thank you. Another question is, I just quit my job to build my business. It's incorporated. I have a bit of money set aside, and I'm not the main income in our home. I'm debt averse, so tend to shy away from just paying myself if the money is in there. Your thoughts on paying yourself, what you're worth from the beginning, even if that means it's from a loan versus living lean until you're profitable. So if you're getting started, you pay yourself from the get-go.
Yeah. So again, I'd go back to the budget to see what the numbers are going to look like. If you're going for a loan, then what they will want to ensure is they want to ensure that, and especially if you have a partner, right, they want to see a household budget. And they want to know, the lender will want to know what is the amount that you need to bring home to ensure your financial security, including debt repayment. And that is the number that they expect to see under general manager salary or founder salary or compensation, regardless of whether or not there are any sales in there. They will lend for that purpose. If you're doing this on your own and you're not looking for money, honestly, this is my feedback. I would sit down with my partner and show them my budget. And I would show them exactly at what point I expect this business to be profitable, because that partner is taking a gamble on this business with you, right, in this process. And especially if they're going to cover all of the expenses for the household and you are not going to be paying yourself anything. You might decide that you're going to take those earnings and reinvest it in marketing to up your investment and start generating the sales. But my advice would be to sit down with the partner, show them what you are going to be accountable to do, at what point you expect to make revenue, at what point you expect to be profitable, and at what point you expect to be able to pay yourself so that you can contribute to the household. I think it's a discussion that needs to be had, because again, remember, our partners in business are just as liable as we are for all of the debt, right? So you're in a joint partnership, even though you might not think you are, because it's your business. The partner's there to support you through it, but taking on that liability with you.
Thanks for that. How do you calculate the days for vacation and months of slow revenue?
Sorry, I missed that.
How do you calculate the days for vacation, like vacation days?
Oh, you don't need to worry about that because it's all budgeted in. Remember, like, we've budgeted for vacation in there. And so when we say under payroll deductions, when we say that $10 an hour becomes $14.60 an hour, that is including the vacation pay, right? So we don't have to budget extra for it. The only time we would have to budget extra is if you plan to get another person in to replace that person, right? So if you're going to bring in an interim helper, right, because someone's going to take a whole month off and your business can't run without that person, that's when you would budget for that additional person. But you've already budgeted for vacation in your payroll deductions.
Gotcha. Do you have any advice on how to learn more about bookkeeping before engaging a bookkeeper?
I put my email out there, but if you want, we've got a blog post that I can send you. So anytime you're looking for anyone to fill out your financial team, so your financial team should be comprised of a bookkeeper, an accountant, your lawyer, believe it or not, because they're setting your corporate structure, and the person quarterbacking all of this is your financial advisor. And you want a financial advisor that sees your business as one of your biggest investments, right? And how it dovetails into your entire portfolio. So to answer your question, in this blog post, there's a series of questions that you should be asking these individuals. So specifically, I'm going to send you questions to ask a bookkeeper, but we should be asking them, are you familiar with this industry? Are you familiar with this stage of business? What software do you use? What is your communication protocol? How often can I expect to be hearing from you? Do you actually help coach and advise through this process? Are you familiar with the Cashflow Canvas? Because it's a very different language, right? That we're using here. It's what we call management accounting, right? So we want to make sure that your bookkeeper is going to be able to support you through this process. So I can make sure that you're able to ask them the question. And then, just like we had today, a rule of 3, you go out and you interview 3 individuals for each one of these roles. And you ask them all the same questions. And then based on the feedback that you're getting and the vibe, right, and your intuition, then you make the decision on who to go with.
Thank you. How do you account for the hours spent networking, learning new skills, workshops?
I love it. Okay,
cetera,
great question. And I'm just going to go back to the other question for a second, because I think a really great starting point would be ensuring that they've got designation. So CPB is the Canadian Professional Bookkeeping Association. They train bookkeepers on a very specific protocol. So I would make sure that they've got a designation there. Okay, so how do we budget for all of the hours? So the hours, you'll see in team and personnel, you'll see in your sketchbook that there's a line item that is called professional development and or training. So you're going to budget for the cost of the training there, right? Your time is already accounted for in your salary, right? Or the compensation that you've budgeted for. So those are for the hours that you're going to work. That's a different conversation from a financial budget. That becomes a time budget issue where it's like, okay, I'm going to allow myself. So in my case, I allow myself 3 hours to work on finances every week. It's 27 hours to work on sales and communications. There's X number of hours on product development. So you almost need to create your own time budget, right? And allocate a very specific amount of time for that professional development. But when it comes to your numbers, again, you'll see one of those extra line items is the cost of professional development and training, which you would budget for separately.
Perfect. Thank you. And do you recommend any software for bookkeeping for startups?
Yeah, I love the questions. It's always questions I find are sometimes easier than presenting. Just go. So I have to say, just coming from this conference, Canadian Professional Bookkeeping Association, kind of the incumbent right now is QuickBooks, and QuickBooks has integrated a whole bunch of AI functionality, or they will be. It's being announced in November. The other one that I have to say I really do love, it is so user friendly, is actually Xero. But it depends on your industry. It was actually started out of New Zealand, and it was the first piece of bookkeeping software to actually be developed for the cloud. So QuickBooks has tried to kind of build as they've gone along. As you probably know, it was started as a desktop, right? And then it went to cloud. So they've tried to make it work. Xero was intentionally built for the cloud. Like when you go to change your chart of accounts in Xero, it's drag and drop. Like literally you drag and drop it. It is so friendly. But I'd encourage you again to make sure that you're working with a bookkeeper that understands the software and understands what industry is best. And then I was actually very surprised. There is Sage. I don't know a lot about Sage, and I've heard that it's I don't want to get into any defamation, but it might not be one of the top three. But the other one that is creating a really strong ripple in the market, believe it or not, is Zoho, Z-O-H-O.
Oh,
and
yeah,
they're what it seems to be with them that is one of their strengths is their app integration and their CRM integration. Right? All of these apps that integrate really quite seamlessly. So again, I would encourage you to reach out to your bookkeeper and accountant. Make sure that you're getting sound advice from them. Make sure that they understand the software so that they can help you set it up properly so that you can manage your numbers. And then make sure that the accountant's aware of it as well, because it does take a team. It takes a village to make these numbers work.
Thank you. So our last question, I'm not sure if I really understood that question well, but I'm assuming the question is around AI. Like, you've kind of covered the app side of things now, like the different apps that you can use. Would you use also AI like extensively for bookkeeping?
No.
Okay.
And again, just coming from this conference, there was a lot of conversations on AI. If you're going to do AI, I would actually get the bookkeeper to be using the AI, like really understanding the AI before it gets integrated into your books, because your books are your Bible, right? Like we don't want to mess with that Bible. It's what CRA actually works off of for all of your annual reporting. So I would not start playing with AI within your bookkeeping software. And if you do want to incorporate AI into it, I would definitely reach out to your bookkeeper and make sure that they're the ones that really understand it and that they're the ones that are setting it up for you to make sure, again, that you're not compromising your Bible.
Perfect. Thank you so much, Tanya. I think we have
Abdallah,
all
thank
these
you.
questions addressed. Linda, anything else?
No, I just want to say thank you, Tanya, for your time and sharing your expertise with us and our audience. It's just, you can't put a price to that. Like what we have learned here today is incredible.
Amazing.
There's a way. I know there's a way. Calculate out.
Yeah, this is
There
true.
were questions about when is the next workshop, so I guess maybe Linda will
I love it. I
answer
love it.
those. I guess.
Yes, we do have another webinar tomorrow. It's on ChatGPT and streamlining your marketing strategies using ChatGPT
Perfect.
and AI. We do have financial workshops coming up in November for Financial Literacy Month, but I think this is the great way to get started. I honestly feel like we have everything we need here with Tanya, to be honest.
I love it. I love it. Yeah. And now all these other workshops that you do too, you'll see how these are, how they factor into the planning, right? Like each one of these, you'll see how they all dovetail together. So thank you guys so much. And again, to everybody on the call, thanks for sticking with us through this entire process. And you'll see invitations come out once a month. We just get all the founders together to talk about budgeting and where you're at and how we can support you in making sure that you can implement, measure, and modify. So any other questions, we encourage you to come on those
Perfect. And
calls.
they can always reach out to Business Link for any more questions.
Absolutely.
We'll be more than happy to take those.
4 stellar coaches that are there to have your back on any one of these building blocks, right? You guys know it inside and out. So thank you for that. Thank you for that work.
Awesome. Everyone,
All right.
Thanks. Thank you, everyone.
Stay tuned for the follow-up email and yeah, enjoy the rest of your day. Thanks for-
Fantastic. Thanks, everybody. Bye for now.